Good morning, everyone. This is Rose. Today is December 27th, 2 minutes after 9 a.m. Tuesday. All right, so let's begin. All right. So we were going to have a very short week due to Christmas. Yesterday, markets were closed. And so we have today, tomorrow, Thursday, and Friday. 4 trading days left for the remainder of the week and the month and the year. And then we start the slate squeaky clean with 2023. All right. Let's see. What do we got here? What you are looking at, which I'm going to switch back to my old workspace in a second, but I wanted to go through this real quick because I've had this chart for some time now. And I found my buy zones and sell zone. This used to be a buy zone, but it was actually equilibrium, which was support at the time. Resistance turns support. So it becomes a magnet. And it is support. It was originally before it was tested. So it was like this. Think of it like this. Okay. Before that touch, this was actually a buy zone, and it was fresh, so that makes it a demand zone. I get this question a lot. What's the difference between buy zones and support zones and demand zones? We call any kind of zone, whether it's a demand zone or a support, we call it a buy zone. All right. So there's a difference between support and demand, but I try to point it out as much as I can. Support is something that has been tested before, okay? So it's not necessarily fresh. It acted as a support before. It gave you evidence of market bouncing there when it gets there. Demand is something that was never tested before. It's fresh, okay? Think of it that way. You find areas where market slowed down or took a pause and then did something violent, okay? Did something so very violent that the price actually moved in a hurry. So you get these impulsive, imbalanced bars, big bars, whether they're bear bars or bull bars. If they are consecutive bull bars, generally I look for 3 at minimum, you get a demand zone. There are 2 kinds of demand zone. There's a primary and there's a secondary. But they're all, we put it under the buy zone, okay, to make it easy. You see right there, this is a 30-minute chart. So each bar is a 30-minute long, which makes a buy zones a lot more accurate. You see 1, 2, 3, 4, 5, 6, 7, 8 half-hour bars, okay? So think about 4 consecutive 1-hour bars. Think of it that way, right? So that is right there after a certain move like that, impulsive move. There's a pause. That's a bank zone. Institutions are wanting to buy again. They're building their cases. They're adding to their long positions right there. So they're most likely to get another leg. Remember what Al says. You have a really nice move up. Most likely you're going to get a second leg, might even get a third leg. But it doesn't end there, right? So this is an evidence that the buyers were there heavy. Most likely their buy positions, majority of them, might have entered, activated, but there are also ones that have not been activated. So that's your evidence that when the price gets here, it's going to bounce very hard. And it does that twice, at least twice. So there you have it. It's fresh, so that makes a demand zone. So think of this as green, right? So you wait for price to come down here. You wait. And that's it. Look. That's the touch. That you see that little, so what's your signal bar? Anytime you see a pin bar like that and the buyers showing up and closing more bull bars, you can either wait for a second entry, which is this is a second entry, this is the first, but you can start the buy and your stop goes underneath, okay? Look at this buy. Almost 50 points. Well, it is 50 points. Not almost, 50 points. And then it comes back after generally about 8 bars, right? 1, 2, 3, 4, 5, 6, 7, 8. And doesn't matter, same on any time frame. I wait for 68 bars, price returns, and I look for a second entry long. Look at this one. These are called swings, okay? You get a really nice, especially the second one is a good swing. Now look at that. That is a lot more than the first one, right? And they got another one. Look, 1, 2, 3, and then it comes down. There's a wedge there. Go back to L's teaching, right? 1, 2, 3. Last push originated right there. When it gets there, if you sold with 2 legs, you're going to take profit. You might even buy again, right? Why? Why would I buy there? Well, there's another demand zone there. That's a buy zone on its own. Look, consecutive bars, another bar, right? Leg 1, leg 2, another leg 3. That is a miniature demand zone, but it's a secondary one, not primary. But you can use it as primary. The primary one is actually like here, or maybe here. This, I would take that as primary. So price, when it gets here, it's probably going to buy again. Look, it bought right there. So apparently that turned out to be, that secondary turned out to be very strong, which is right here, right? So where did we measure? Right around here. Look at that. Now it's a support because it tested many, many, many times. What does a support do? Well, it does what it does, right? It's going to support that area, and you're going to find buyers, but eventually it will break. And when it breaks the support, I try to look for another demand zone that is not touched before, and that's where I'm going to buy probably twice and look for a swing long. Look at this one. That right there, now, this is what I'm interested. This right here, this whole area is demand zone. Right, so I could put it like this. Now, you're going to say, well, if it's a demand zone, why didn't it bounce? What happened there, right? Originally, it was a support. So you have to always pay attention to that, right? Can it still buy here, even though it's very, very strong, right? So even though, where was I? Right here. Even though it's very strong, right? Huge impulsive move. But eventually, it was actually a support. So you have to recognize that. And it's a tired place. There's another place down here. It's a lot better, okay? The market wants to come down. So, plus, in order for market to again move like a huge move, it needs to run stops. Where are the stops? Generally underneath that zone. So support under the support zones or demand zone, there's slew of support stops. So they run the stop, but they can't go anywhere. They make a new low, they run again, that's their second. It's no longer going anywhere, right? Finally, they found after the third try, and you have a wedge there, and it goes again, but it can't go further higher. So then it comes back down. Now this area used to be, okay, green. It's no longer green. I made that support. Then eventually it turned into now resistance. It's red now, okay? So when the demand zones are broken, okay, if they're tested like this, okay, we breach underneath demand zones. Now the demand zones become invalid, especially how much or how many times that the market is breaching under. So when next time it comes in, I may not be inclined to buy, okay? This one bought, that's fine. But to me, this is a tired demand zone. I'm going to think that as a support, and I'm going to wait for that actually to break, and I might actually sell it and look for a, okay, measured move down. Now, this is a 30-minute chart. I found these on a 5-minute chart all the time. So I call it a buy zone and sell zone most of the time. Like any demand zones, like this one was fresh, right? So it bounced the first thing. Look how strong it is. Comes in first and second. They never breached underneath, so the stops are safe. When it comes down, it might bounce again. But once it breaches, start to close bars, it may not run that far, okay? Even if you see a really nice bounce, but that could be the end of it. Now for the supply zones, I'm going to go through this again. For the supply zones, it's the opposite. If something's selling impulse, right, you got 3+ bear bars, and it pauses here, sells again. When you get there, it's going to test once, it's going to sell, look for a pin bar, go back up, it's going to sell. That's your swing, short. like that, like this, right? So they went up, but it's too early because there was a gap, but they try to sell it, went up. Or you could say, look, that's first and that's second, but it's not selling. We're not making new lows. When I don't see new lows being made, okay, then I start to either get out of my short and I look to see what we're going to do when we get back. So now every time it tested twice, right, it's now support, no longer a supply zone. And when we start to see bars going above, I look for a new zone. Where's that new zone? Look at the impulsive bars, 1, 2, 3, 4, 5, and going. Right before them, there was a bull bar. Right there is your supply zone. First touch, sells. Second touch, sells, even made a lower high, and then swing short. See how that works? So you can find this on any time frame. I would not go any more than 5 minutes. Things get very, very busy and very, very unreliable on the 1 minute chart. I wouldn't do that. Even tick charts are not that reliable unless you're using 10,000, 8,000 tick charts. I would stick to the 5 minute, 15 minute, 30 minute, so and so. Anyway, so what has been happening on this is a kind of a bird's eye view. We are in a channel, okay? Price is in a bear channel coming down. We have been in this expanding triangle, okay? So basically on a lot larger time frame, okay, maybe 4-hour time frame, what you're seeing is this. Inside IOO, most likely, okay? Inside, outside, followed by another outside. It's a breakout mode, so it's going to break out from somewhere, okay? So market is trapping the sellers, trapping the buyers before it makes a decision, but meanwhile, it's actually on some kind of channel also. Couldn't get my hands straight there. Okay, here we go. So we are, if you put another line there, we're on the second tier. This is the first tier. This is the second tier of the channel. And are we going to break or are we going to go higher? Now, I had also these counted right here. So it's a leg, pull back, another leg, pull back, the third leg. There's a wedge there. So we reversed, we got above this, but then we came back down, made a double bottom. When something is so bearish, even if it goes up, expect it to be tested again. Market always wants to test there because there are bears stuck there. So they're going to sell, okay, before price goes into premium area. It's going to sell at the 50% equilibrium area, and it's going to try to get back to where it was bearish, to those lows. But no one sold again, so it bounced. Now they're trying to break that. If we break it, we might go higher. Maybe go test this area, okay? Maybe go test that area, okay? But first, bulls need to break this. They are now trimming this trend line, okay? But if we do break below, then we're going to come down and take out that low, and we might actually test this demand zone, test that, maybe bounce there, or come down and bounce here. So I think market is trying to decide here. So I'm going to go back to my workspace now. Just give me a second. So we're stuck in between these two levels, and we're in a trading range on the 30-minute chart. Makes things a little bit difficult. Even there, we have expanding triangle, right? So, sorry, look at that, and then look at that, right? So we're sort of smack in the middle of it, and market is deciding if this holds, we could end up going up here. So the 4,000 would be magnet again, or we're going to sell and we're going to come down to 3,700. So just give me a second. That's the daily. I'm going to go back to monthly. You can see this month is we're all the way down here, pretty bearish. And bears want to come down all the way here. They want to test here, okay? So they actually want to breach this month's low, but then again, that's 3,700. We are at 3,870 right now. So can we make it 130 points in 4 days? Well, they're going to have to close this, bring this month all the way down here, but the bulls actually want a second leg up. So even if we close this month at its low, okay, this could be just a pullback. Okay, and then January, even if January starts, the month starts, bearish, it could end up actually go higher, bullish, because I think the bulls want a second leg up. I don't have too much information here, but you can even see it by just looking at it. We're in a trading range. Think of this as your trading range, okay? And we're sort of in the middle, but a little bit lower than its middle. So this is how I would take the trading range. There and there. So if you actually measure, we're slightly there. If this month closes above this 50%, then January could start bullish and go up, test, maybe even break out from the high and get a measured move. Who knows? We could be very bullish. So we're right now in the middle of this trading range. On the weekly, I have nothing on these charts. Okay. We're in a down channel, but let me add a little bit more. Okay. So could this be a bull flag? Double bottom, wedge, lower low. We need a higher low to get a major trend reversal, right? And a price to go up. And we're again in some kind of a trading range here. Okay, so bulls need a higher low, and they need to maybe test that middle of that trading range and get back up. I mean, this is the last week. There's nothing much left. So maybe New Year, we get back up to this level and test these highs. So we're smack in the middle, and we're overlapping with last week. Last week was a complete indecision. So how would I read this? Well, look at the bears. They did a lot better than the bulls. Okay, so look at the bulls. This leg is so strong, but why didn't it get continuation? Right? So what happened there? The bears did a lot better right here, second leg. They even actually breached that low and sold a little bit. And then the bulls, all the bulls are doing is putting us back, the price back into the trading range. So you have leg one and a leg two, and they can't even get to the highs, even the minor highs. They cannot. That's a lower high, that's a higher high. They cannot even get to those highs. So bears might be using this as a pause, okay, creating some kind of a secondary supply zone and then sell it down, okay. If we do get some kind of a double bottom, higher low, that's still a sign in January we could go right back up, but that will put us into a larger trading range. But the trading range highs would become the magnet. Okay, bears want to break this low and get a measured move. So say we broke it, just roughly, I'm taking that, and that would be the target for bears. That would be catastrophic. That's like 26,770. Or I could say, no, I'm just going to take this. That would be the target, but still that's way below 3,000. So I think the bulls eventually will show up, but we're smack in the middle right now. So we'll see how that goes. Now on the daily, we had that rejection from the upper trend line, and we're back into this channel, bear channel. Right, so bears want to test these lows, but they did already last week. Okay, so we were up and then we were down. We closed in 1, 2, 3, 4, 5 days. Closed up, down, inside, ended up closing in the middle, ended up being a doji. You saw that already on the weekly chart. So now we're opened here, we have, let's see, 1 pullback, 2 pullback. Can we come back down? And maybe come back a little bit more down and maybe make a higher low. I don't know. It's right now a sideways. Bulls want to get back up to this level. They want to close above it. Look what's happening here, something important. It's the daily. 50 versus 20. They're literally merging, okay? If 20 EMA moves underneath 50 SMA, that's bad news for bulls, okay? We could just go up, look for sellers, and sell back down again. So that we are right now in some kind of a pause area, okay? And the bears might be looking for some kind of a lower high. And if that crosses, okay, we get another, this bar starts to come down, we could end up getting a bear flag. We could break these lows, right? We could test right here, might be even all the way down here. That would put us into a much bigger trading range, and bulls want to see probably the low of this trading range tested right around here before buying. So if they cannot find buyers here, okay, this week ends up coming down. We're in the second leg. Next week, when the new year starts, okay, we have a head and shoulders here also, right? So we broke that. We're retesting. See, like we broke it. We're retesting. And if we get the bears actually sell it, I'm going to look to see if we can actually find buyers in the new year and then go right back up again to where we retest and broke down and back tested, and then maybe reverse back up to the top of this trading range to here. So we're smack in the middle of everything and almost everything. So I'm going to reduce my now I don't have year, but I'm going to add it, so give me a second. You see what's happening? This is this year and the last year. So the bears are trying to close that body. We were up here eventually. They're trying to close that body right around here. If they do that, we have an outside down bar. Well, we do already have an outside down bar. The goal is to close this year as low as possible. That becomes, okay, in a higher time frame, it could look like a head and shoulders maybe, I don't know. But it's a 2-bar reversal. Next year could start, okay, bullish and then turn bearish. We could even sell more, but I don't know how that's going to be. Or next year could be like this. It could start, comes down here, looks like bearish, and then finally next year turns bullish. We get an inside, outside, and then the entire next year would become an inside bull bar. Imagine that. As it closes on its high, we get a breakout in the following year. Wouldn't that be great? So this would become a pause and go. So I think closing this bar as low as here, and then the next year, even if we sell the first month or the second month, January, February, and then sometime around March, end of the first quarter, we start to buy without breaking the low of this outside bar, okay? We could start to make that next year inside. And if we do close next year, that would be amazing for our retirement accounts. I think we would get a nice breakout. If you actually go to the bonus video that's posted in the course over the weekend, which was a great Christmas gift, I watched it, and you're going to learn a lot about II, IOI, OO. Okay, so basically I am speculating, if we do close this year down here, yes, it's a 2-bar reversal, and then we go and sell even a little bit but not breach that low and then go right back up entire year. That would give us a IOI breakout mode, especially if it closes bullish. If we go, what if it goes up and then closes bearish, right? The first half of the year is bullish and the second half is bearish. Then the following year we would get a breakout bearish. So I think this week we might try to close this bar down here. So let's see how that goes. It'll be interesting. All right, so hourly is, let's take a look real quickly. There's a little bit more time. This is last week's range, okay, mid, high, and last week's low. We are slightly inside the upper zone, okay. We have a sell zone up here. We're in a trading range. It's also a expanding triangle, okay. We already have 3 touches. We're kind of in the middle, but a little above. But I think you would take that as your apex of your triangle, and we are right there, okay? So bears want to sell this back down to the last week low. Bulls want to go back up. So it's not that far away. 4,000 is slightly higher. Now, if we start to become bullish on 4,000 is the place that they want to go, look where 4,000 is. Target line right there. We would break out. But if the bears actually want to close this week bearish enough, then I'm going to eye this low and failure to hold, even if it bounces. And I'm going to look for these areas to be tested. So this is what I'm going to be basing my range. Okay. Globex is, I need to adjust this a little bit. We're right at the Globex low. That's the Globex range. Okay, so we're already breaking that. This area is a congestion zone. You can see we've stayed there pretty long on Friday, so we might actually come down, test a little bit before bouncing. Okay. Let's see where they can close that body. Trying to come down here. I think a lot of people are on vacation this week, therefore, I don't know how market is going to trade. I mean, the volume-wise, end of year, people merge their Christmas week with end of year, you know, go to places. So the volume is probably going to be okay, but I don't know. We'll see. Right now, volatility, it's not bad. You know, price is moving about 5 points up and down. Not bad. First bar opened up within yesterday's range. It's I think it's trying to reach 38.59.50 area. 38.59.50. Let's see if they can make it. Bulls want a breakout. Bears want to break that wedge, break down and sell. So that would put me up, down, 1, 2, 3, 4. 3, 4, and 5. This is where the bears are. They want to break this and they want to come down here, but right now this trend line is holding. This is where they want to come down to. Okay, so let's just wait. So this could come down a little bit. 38.59.50, 59 even, we could test. And we could even continue if we wanted to continue all the way to 38.55. I just want to see that wedge broken out of with a bear bar. We are testing where I said we would test on the Globex and slowing down. Now, on the daily, the 20 and the 50 are still merged, no decision made. So I would definitely pay myself somewhere around 38.59, 59.50 area. Okay, we just tested my 59.50 target and we just bounced. So you could have scalped it. Now we can continue to sell into 38.55. That's a really good bar. Testing some kind of a support here though, so be careful, but it is a really good bear bar. Okay, if the bears get a second bear bar closing on its low or midpoint, okay, that could be a trend from the open, and we could end up finding ourselves right around here. But the first target is always the horizontal target, which is this, okay? 38.52, we're gonna bounce there big time. 55 now, my target, definitely, but we could continue surge a little bit lower. I said the ATR is good, it's healthy. It's almost 575. It's not almost, it is. So this is the first target. We could bounce pretty hard. But if we do break below 38.52, this is where we're going to find ourselves, right here. So if you're swinging, take profit here heavily, okay? Leave a runner to here. But we're going to bounce a little bit at least. See how they're taking profit right there where I marked it? On the Globex, we moved furthermore down. That is your target now. They need to close. Bears need to close. As they're taking profit here, they still need to close that bear body underneath 52.50 to continue furthermore down. Then this is going to become your target. You don't have to take the lows. You could just actually take the body open if you want to take even earlier profit. There's nothing wrong with taking earlier profit. You could consider yourself smart for doing that. Why would I take profit instead of there but not here underneath? Well, think about it, right? So where was the original bulls? Right at the open of that bar 20. It's an evidence that bulls were originally there, right? Bar 20, open. So chances are they're still there. There are a ton of orders there waiting that didn't get activated. So as soon as they hit that buy zone, they might activate it. And if you are still trying to get rid of your short contract, you may not find anybody to unload your short contract. So just try to get out a couple of ticks or a 1 point before that target. All right, so we did continue down to 38.55, and then we breached and tested 52.50. Even furthermore down is if this bar in 1.5 minutes closed below the 52.50, we will continue down to actual projected target. This is my projected target. It's nice to have, but remember, this is a trading range here, okay? And we're going to be testing trading range lows, most likely. Or if we do not close a bar underneath and suddenly we close here, we might get another bull bar. But second bar closing on its low, way below its midpoint, is a sign of continuation. And down all the way until here, you know, we could still sell. I like to see a little bit more move down to the 38 is 45.43 area. But you should have unloaded a lot of your contracts. Like I said, you know, this is the one that I respect is most of the time, because what happens is when we break something, That's because there was a trading range. Market was balanced there. Buyers and the sellers were agreed that this price was the right price, okay? And when a breakout happens, that's imbalance. Anytime there's a breakout happens, everybody gets excited, but that's actually a bad price action, okay? So think of it that way. This is a good price action. Believe it or not, anytime people call this, a retail trader calls it, this is choppy. I don't like this. I'm out of here. This is consistent. You know what the price is doing. It buys low, sell highs, buys low. Why do you think Asia always trades in some kind of a tight trading range? Smart people of Asia, I'm not mocking anybody, no pun intended. I am literally saying smart people of Asia. They figured it out because they probably have low volume and they set it and forget it. You know that commercial, the grill? That's what they know. This is great. You know, we're stuck in this. Might as well, let's make, you know, lemonade out of lemons. So they're smart. They buy low, they sell high. They buy low, they sell. That's why, you know, it trades in some kind of trading range. They know what will happen. So it's, I mean, wouldn't it be better to trade with something that you know how it's going to move than suddenly you get these big breakouts? Everybody gets, you know, so excited. Breakout is imbalance. It's happening too quick, too fast, something violent happening. It has to end, and you can't really say when that's going to end. You jump in, and suddenly it reverses. You're stuck. That's not a good price action. So what you're getting here is a breakout of this balance zone. So you're getting a bad price action, okay? And it can go back, snap right back to where it broke down, which is that trend line. We could go right back up here. And that's why I said most of your contracts should be unloaded here. You need to pay yourself. Leave a runner, but if you start to get big bull bars, get out or sell again when it gets up here and try to find a break even and exit out. Or if you don't see bull bars, the bouncing ends here and then we close a bear bar, then you know it's going to come down here. This was your second target. So think of that. Anytime you see a breakout, ask yourself, do I want to jump into this? How much space do I have? What if it turns on me? If it turns on me, what would I do? Where would it go? So you have to ask those questions and not just, you know, hold your breath and jump into something that you don't know what's in that water. Because this is bad price action. However, as bad as it is, we also have to make money with that, right? We can trade anything. We could trade breakouts. We could trade trading ranges. We could trade anything. We could trade tight trade ranges. There's a gap here. So I'm going to measure that gap. I'm going to be smart about it. I have 3 bear bars so far. And if I put my stop there, this is actually the target for bears, as long as they close bar 3 on its low, bearish, and maintain this bear gap open. Now, this is the actual, or you could say, what if I just take the conservative approach? Sure, then that's your conservative target. And we're going to hit that, most likely, but we really need to close something underneath 52.50 to continue further down. We still have no bear body closing below that level. There it is. Conservative target hit, and then they take a profit right there. Look at that. Clockwork, but the actual 3 bar, that's your target. So it's right on top of my projected line anyway. So 38.43, here we come. Dun, dun, dun. Excellent price action at the open. I am loving it. Even though people are trying to distract me in the Discord trade room. I'm getting my target. I don't care what emoji you post. There it is. We got my second target. We got it. Beautiful. This Christmas is great. It's just keeps on giving, even though it passed. Here is the Happy New Year. All right, 38.43. Let's not goof anymore. I can goof. although Brad is working today, so I'll keep it professional, but I think the rest of the year, I get to stream and nobody is going to be there with me, so you guys are stuck with me. All right, so we met the target, second target, but look what happened. If you actually, like I said, put your exit order right at the 20 low, we did not touch that. And I warned you, get out right there. The market was so forgiving. Look at that. It gave you extra couple of ticks to fill everybody. I think it's going to continue down and get this, but at this point, I'm out. I don't really care about any of that anymore. And I also said on the Globex, we're going to test that line, which we did. So that's excellent. Oh, we do? Well, I did not measure that. Well, let's measure that, Emil. That's 30, though. What do you mean 40 from the last bull bar ETA chart? Oh, the ETA chart. Well, I don't have that. Well, let's measure on the Globex ETH. I want to see how much that moved. You see how much the bulls moved? Only 6 something, but never were able to get to their 10 point. So bulls did not. So you just measure from there instead. And Emil is right. Kind of right. Where'd you measure it, Emil? Let me see. If you measured here, that's actually, I mean, fine. But the problem here is, Emil, is pay attention here, please. You see this move right here? See that move right there? If you actually measure from here to there, even though that's about 7 points, but that's bearish. So if you actually measure here, bulls only move this much. So you should be measuring, in fact, from here. Now, if I measure this, bulls actually took profit there. So I should be measuring from here, not from that pivot level. So if I measure there, my 40 is right here. Now, bears move the market 40 points, and then they continue another 10 points. They take profit right at the 10, goes up, but they cannot close a bull bar, so that means add another 10. That's it. So they're trying to get to, they added another 6, so they're trying to close that bar. Okay, so if this is your 50, they're trying to get a 6-point solid move to get to the next 10. That would put them to 60, which is right there. So they're trying to get an additional 20 points. Okay, but eventually this is going to bounce. And this is where they're trying to go. See how I measured it? That's because they're trying to get to here. Look how much they've gotten close to my target. Okay, but it's still not a solid test of it. So there's only 28 seconds left. But good for the bears. They've done a terrific job. So I think this is fine as is. You should get out of your short at this point, especially the amount that this is going up now. If they continue, that's because they did not touch it. But to me, this is just fine. Bears got what they needed. Is you got now impulsive move down with 4 bear bars. It's a trend from the open. If you're still selling, basically you're saying, I'm going to keep selling this all the way down to here. Okay, so low of yesterday is my target. So what that means then, you're looking for not only that 60, that's a 20 point, sorry, 40, 50, 60, yeah. So you're looking for 20 point bounce and then another move, another 20 point, okay, another 40 point move, so 80 point move down. So that means you're looking for a bear bar, okay, breaking this 43, 38, 43, coming down, breaking that line, okay, bounce, and then sell again and come back to here, low of yesterday, which is Friday. But they already sold with a strong, 4 bear bars. So we might go sideways and up a little bit to take some profit. Some limit scalpers are probably above at the breakout point. which is, where is that breakout point? I'm going to get rid of this. You got the idea. If we do pull back, we would pull back to right around here, okay? And I would look for a scalp, the amount of ATR. But this is still going. I said earlier, Josephine, that bar 1 is a really good bar. It's trying to break this wedge, break out of the wedge. And sellers were there, so they did sell. Now, this was a little bit iffy because we tested a target, so I said, you know, take some profit there, but if they start to move down and no bull bars, you can continue to sell, and they did. So this is basically, think of this as a climactic sell. First pullback, second pullback. We might get another leg down before we actually rotate back up. So I think the sellers might be at 38.49 and 38.50 area. So we're going to pull back to, so these targets are met. Beautiful. Even those guys actually got their fair share. So I like to see this area, some sellers, maybe 1 point above or right around there. That's why I said it's probably going to pull back. So it's doing this basically. Probably the third push down we need to get. You can avoid trading the first couple of bars or 6 bars. And but we have a really nice first bar, and a bar 2 is a follow through second bear bar. So I did say that I think the market is looking for a trend from open, and so let's see if this can pause here and then come back down. Now, what you're asking there, okay, is what you're asking there. When do I, wait, what are you asking? Oh, let me read that again. How do I know when it's okay to trade the first 2, 3 bars? Okay, so there you go. So you're looking for a strong first bar. As long as you're not selling into some kind of a trading range low, which there's enough space, okay, and you know, you can still continue to sell, but I generally wait for a second bar. But this was, I took a chance and I sold it because I kind of recognized the wedge here. 1, 2, 3, and a lower high double top, major trend reversal right there. 1, 2, and 3, lower high double top. Okay, so we're going to come down here. We're going to come down here at least, and then this was my extension. And then you start to get these gaps. You see the gap? This bear bar, gap down, all right, below the EMA. And then the second bar already separated from the EMA. So I'm going to get rid of these so you can actually see this. I'm done. Okay, so you see, at the high of yesterday, we could not get above high of yesterday. So that's a sign. And we're at the top of a trading range. First bar is gapping already, and then it closes a gap down below the EMA. Second bar opens gap, so you have a space here all the way to here, bar 20. Now, why are we bouncing at bar 20? Well, it's a buy zone also. Okay? So bulls are trying to get a 10 point. They probably got it already. Nope, it's around 9 point. So they're just trying to go. I didn't sell anything here. So ATR was 7, so it's 3.5. If you actually sold around here, that's only 2.5. Okay, right around there. But if you, I said it could go 1 point higher. If you sold a little bit, that's, they already got the 3.5, right? So bears did scalp, half the ATR a little bit, but normally they want to get at least 1 time the ATR. They just can't seem to find sellers just yet, but this can still sell. It's just pulling back up for the second time. Leg 1, pull back. Leg 2, pull back. We need a leg 3 down. So we might end up coming to here. All right, so if you measure again, this time it's not really 7, so it's a 575, I'm sorry, 675, but I'm gonna count it as 625. I'm gonna take out 2 ticks and see if the bears can actually get down to here. Here. If this bar closes bearish, they can sell. Now, however, if this bar closes bullish, I'm going to question the bearishness. But it should sell. Well, if you're trying to swing at an RTH open, where would you want to swing, right? The best place to swing is at the highs or the lows, right? So generally swing trades are MTRs, right? Major trend reversals. So you don't know if market is going to give you a swing. The only way to know, at least have a sense, you look for a wedge and a failure to break above that wedge to continue in that direction. So, and then you get this big bar, you could sell that, right? So these levels are going to be targets. It's a trading range also. So we're at the high of yesterday's, and first bar did not even test the high of yesterday, nor it closed above it. That's a good swing start. And then what you do is, hey, I'm going to measure this. How much was that? That's nothing. So if you start measuring maybe a 10-point, in order to swing to begin, bears need to make a 5-point, close a bar at 6-point, get to 10-point. Not only 10-point, they actually close the bar at 11, okay? And then you get another bear bar right at the close of that bar 1. Bar 2 opens at the close of bar 1. So they're swinging now. They're trying to get to the 15, and then they're trying to get to the 20. So 20 points is a swing already. When I see bars get to 20-point mark, okay, in the same direction, and they're showing me gaps like that, okay, I'm going to expect some kind of profit taking on the 20-point, okay? And they breached below it, but they could not close the bar, so they're going to take profit. It could be a 6-point, 10-point. Let's see how much they did. They did 7. And if I measure from here, did the bulls actually able to get a 10-point take profit? No, they couldn't, because there were no bulls there. All this move here with bar 3 is a profit taking, and this much. So since we could not get to the 10-point to create a mini swing to the counter side, bear swing continues. Where are they going to go? The next is 30. See, they breached 30 and it bounced. Again, even if you measure from here, how much they move? Only 9 points. Now, here's something happening, okay? What is happening here? Let me get rid of that. If you measure from this low, bulls actually were able to test and put a 10-point move, but only 1 bar, okay? So, and I'm also counting 1 leg pullback, 2 leg pullback. I need a 3rd leg. Now, because the bulls made almost 10-point move, that's still strong, even if it's a 1 bar, I still expect the 3rd leg down, and I said there are scalpers waiting here. And at that time, it was 675, 699 was the ATR. It never hit 7, so I cannot say it's going to move 7. It's going to be 675. Then to open a trade and close a trade, take out 2, so it's 625. So I measured 625, and look, they went beyond 625, 650, now it's 7, right? So they already got 7 points. So this scalp was a very good scalp. I expected it, but now they're trying to get to the 40-point, which is right there. Oh, yes. I mean, do I decide before entering? I always think of some kind of a swing might start, but it may not become a swing. I have to see the sign. So I treat it as scalp. I pay myself. All right, every 5 point, 10 point, 15 point, 20 point. And on the higher time frame, we reached my 60 point I said we're going to go, which we did. If they continue to sell, that means bears are trying to get an 80 point, which is two trends. And that's right here. Can we sell all the way down here? Maybe. Okay, so why are we bouncing here? Look left. You have 1, 2 bull bars, one of them closed higher, and a little pause and another breakout. So somewhere there, I said we're going to go and test because that is a demand zone or a buy zone, right? So there was a leg up, created this structure. You see the structure? What broke the structure? Bar 11. Got a measured move up. So as it comes down, where that second leg began, or the breakout of that swing, okay? Because think about it. This was, get rid of this for a minute, right? There was a structure there. So if you actually measure, stop goes here, breakout is there. That's your measured move right there. You see that measured move? So consecutive bars, there's a pause. If I mark that pause from here to maybe all the way, well, the same thing here. I already had it, so see, that's where we're bouncing. We might come back again, depending on, but this was a scalp. But now what do you have? Whether we might come back again, we don't. You know, I'm not going to sit here and say, hey, listen, this is very bearish. Obviously, the bar 7 is not that bearish, okay? I still have a 40 point that the bears still want to come down to. But this was a scalp, and this is the third leg. Leg 1, pause. Leg 2, pause. Leg 3. So we're getting some kind of a rejection here. But it's a pin bar. Pin bars are very unreliable bars, especially if they close bearish. You may want to wait for that pin bar's 50% tested before you jump in and buy something, especially above a bear bar. If you're trying to put a buy stop order 1 tick above bar 7, that may not be a good way to go because it's not a bull pin bar. The body is small even if it's a bull pin bar. I would question its validity because the body is so smaller. Look at the wick, right? So I would generally expect some kind of a pullback and see if they can make it to the 50% and see if there are limit order buyers there first. So I do think a lot before I do anything. Okay, so there's the 40-point zone here that bears might still be eyeing before swing anything up. They may need to run some stops. Stops could be underneath this level. And there's a little bit of gap here, so we might dip into that gap before actually going back up. So this is a trend from the open, pausing a little bit. But we're in a trading range. You could see, look left, right? I think a little bit more space. Let's see what the bears are going to do here. If they don't show up, if the bulls don't show up at the 50% of bar 7, and then suddenly we get a really nice bull bar close, sure, I'll be interested in, but I'm not at the moment. Can this area sell again? If the bulls do show up, they're probably going to break that. But I'm more interested in the 50% of this bar 7, so I'm not interested in buying anything yet. Because think about it. What is it? Those of you who have taken that bonus video, II, IOI, OO, we have an I, not so perfect, Okay, 6 actually went above 5, so that's not II, but there are IIs. They're stuck. 5 and 6 are stuck inside bar 4. And so what happened there? They closed bar 6 on its low. If you wanted to sell, you would put a 1 tick stop, okay, sell right underneath bar 6. Your stop would be there, okay? They didn't take out your stop, okay? Because this bar actually went up first, came down and closed here. So now it doesn't mean after it closed, it doesn't go up there, so your stop is still safe. And then they sold and swept you away, and ATR was, well, I don't know what ATR was then. I think it was like a 6 or 7. So it was 772, actually 775. So if you sold 1 tick underneath 6, now you tell me, 775. Hello, 775. Oh my goodness. You see how the bears actually scalped that? Exactly 775. That was a nice scalp. You can also measure it that way. I'm so glad Al Brooks actually made this video. I was really hoping, I didn't make any request or anything, but as I'm talking about these outside, inside bars, and I measured with, levels, a lot of people complained about it. I know they did because it came to me. So they were like, oh, she's using Fibonacci levels. Oh my gosh, it's the end of the world. The reason why I use Fib levels, because I'm measuring, I see something there, okay? Outside bar and inside bar, and I'm looking for a breakout. Let me get rid of this. I'm looking for a breakout. I measure the range of that outside bar. If I'm selling inside the range of the outside bar, I'm expecting a breakout. It's because bar 6 closed on its low, and my stop is above the first inside bar. Or you can put it up here, but that would be too much. I'm trying to scalp. So I have to keep the risk, okay? And it comes down, and I look at the ATR, and it gives me. But even with, say you're not measuring ATRs, you don't have time to do calculations, okay? Throw that Fib level, but these are really the levels that I, put together and tested. That's the shallow target. That's the first target. Generally, it acts as a target, but it's a false breakout. No bear bars closing below the outside bar. Therefore, it's a trap zone. Bears got their target, exactly the ATR value, and then bounced there. So if you're smart enough to recognize, you can actually put a buy order as a bounce there. You make money that way too by scalping. Right back inside and the midpoint of the outside bar, or to the low O, the inside bar, 5, or even the 6. So, see what I mean? I use them as targets, and they're generally to the tick, even goes 1 tick above to give me exactly what I want to scalp or even swing. You don't have to use them. Okay, so basically what you're doing is you put a sell order, your stop goes here, you could go 1 to 1. Well, let me measure that for you. Here you go. Your stop goes there above 5. Where's your 1 to 1? Right there. Right? Or I'll measure it like this. Yeah, that's about it. But if you used the way that I'm measuring, then you would get a lot more for your, investment. Anyway, so that's when we call that mother bar and a child inside. And if I get, go watch that video. I'm glad that video is made. It kind of sheds a light why I look for those setups a lot. They're breakout setups, but not every breakout is going to be a breakout. It could end up being a breakout, false breakout. False breakouts are you're getting a really nice bear bar, and then it goes up, closes there, and if you sold it and you didn't take profit, you're left behind and you're stuck. They're going to trap you. Actually, the breakout is going to be to the upside. Okay, so like I'll prove it to you right now. So I'll measure that again. Okay. Okay, so bulls are trying to run the stops they already ran the stops above bar 5 because that's where the bears put their stops. They took profit, so now they market trapped the bears. Now they ran the stops above the outside bar. Where are they trying to go? They're trying to go to here, okay? But from there to here is a trap zone. This is the first time they're testing. So these breakouts don't come easy, okay? You have to always think that sellers were there, they're going to defend that area. So they're trying to defend right now. They're trying to prevent the breakout. But there are no more sellers. We're going to break out. That's the shallow target. And if we close a bull bar above it after taking profit right there, this is where we're going to go. And the 1-to-1 target, this is what I'm interested. But you don't always get these. It could die. It could die right here and then reverse right back down. But at least you know what's happening in front of you, okay? And you know what the market is trying to do, and you're never clueless. So if you want that, let me show you where that is. Give me a second. All right, go to the course. Scroll down, bonus videos. That one, 15. It's really good. It's long. It goes into all the details, where your stop should be, where your entry should be, alternative IIs, IOIs, perfect ones and not so perfect ones, and how to deal with them. I mean, on its own, it's a course on its own. So I would definitely recommend you to spend some time, watch it twice, and apply. And if you really want the targets, throw my fib levels, take a screenshot of this right now. Create a template and apply to it. And then you're going to see, okay, Rose said from 111.40 or 111 from to the 88 is actually a trap zone. It's never been tested, so that's why we're still stalling here. But once we close a bull bar, that's a breakout. All of those stops are ran. This is where they're trying to go. You can take profit there, and if you see bull bar close above it, have your runner run there, maybe even run to here. That's your swinging higher. Look where it's going right now. Look, as soon as it touches it, it's going to take profit right there. It's trying to break above. Okay, that's it. It broke above this trap zone. That's it. Look, 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 look. Come on, bulls. Almost there. Some early machines know that target is, that line is important. So they take profit one tick below. One tick below. Generally, when I'm taking profit, I take one tick below because I know machines do. I watched it years, okay, as I was teaching this. Look, they took profit and they left their runner. It's going there, right there. Look at that beauty. Right there. That's your second target. If we get above it, okay, ATR is almost 10, well, 9. Okay, so the breakout, I can measure from the breakout point. That's about 9. Look at that, ATR breakout point, 9 point right there. They can double it and get to 18 if they wanted to. 18 right there. But this is 1-to-1 measured move target, so that's what I want to see bulls actually take profit there. They might just take profit one tick below if you want to get out early. This is where I take a lot of my profit and leave a runner for that. And that demand zone or the buy zone worked wonderfully, right? So we already knew it was there. We talked about it. Look at that beautiful swing. I think the bulls are trying to get above the high of yesterday because, and then go further up. Can we get a strong bullish day today? Well, we have a big down and a big up. Market is already confused. We didn't come down to my 80 point. We ended up going to 60 point, like I said, a little bit further down, but that's where we started to reverse. Why? Because I did say that this area is magnet. We're going to come down and test it. Now, can the bears still swing this from the Globex low? Yes, they can. In fact, they're probably already here. There's a confusion here now. Big down, big up. There's head and shoulders pattern. there, inverse head and shoulders. So market is still pushing. Bulls are trying to get to 38.77 area, but be careful here. There's a breakout level, close of yesterday. They're trying to get to the high of yesterday. There might be some sellers at 38.69. Okay, close of yesterday. If we close above it, we're going to go further more up. See, we're already to 200%. That's great. So now they're probably trying to get a 2-to-1, which is the 300. Okay, or you don't have to use it. You could just use my a lot more clear, right? So stop goes here. That's 1-to-1. We're just about to test the 1-to-1 target. That's it right there. Tested it. Now there will be some profit taken probably, and 2-to-1 is right up here. But in order to swing, we need to pull back a little bit. So that's profit taken, could be that pullback part. I did say the 38.69 sellers are there, and they're going to try to, many bulls are going to try to take profit there. But this could continue further up. Some people are having a hard time with their audio. Maybe leave and come back in. That could resolve the issue, possibly. So they're taking profit right there. Bulls want to close above high of yesterday and get a measured move target. Look, there's a small cup and a large cup, okay, which is weird. I guess this is just a cup for the left-handed people. Just kidding. But it is cup and a handle, maybe. I don't know. It's a handle and a cup. If I do see a big breakout, that means we get a measured move target to the upside. So bears are trying to prevent that. There's a confusion. We're at the top of the trading range. So top of the trading range means there's sellers there, maybe a little bit higher, in fact. So what happens if we actually surge above the high of yesterday and then get rejected there? It's possible because we are in a trading range. So always expect to take profit at these measured move targets. Okay, you got a nice breakout, structure broke, outside, inside. This was a breakout mode. So if you put your stop here, I need to do a better job there. If you put your stop here, and if you're a buyer, right, you're buying into the pain point of these bears and going for a 1-to-1. So 1-to-1 is going to be a lot more accurate than 2-to-1. 2-to-1, you have to expect some kind of a pullback before bulls start to swing again. So that's why I said 38.69 sellers are waiting. Can the bulls push this a little bit, or is this just a big leg in a trading range and then we come back down again? It's possible, but I think we're going to get continuation. We just need to close a bar above 38.69. If we can get that, then that's good for the bulls. But we are getting rejection right now. I like to see continuation into 38.77 area, at least the 73 first. But I did say on the Globex, as we get to the Globex range low, there are sellers waiting there, right? So bears are gonna try to stop, but I doubt it. I think we're gonna continue a little bit. So right now we're pausing. If this is a cup, we need a handle before we break out and get back to the 2R, which is right there. So what you need to see here, a quick pullback, go up above 1R or measured move, and then go here. So that's why I said the pullback is kind of important. As far as the news go, I didn't look at the calendar. Nothing. Oh no, international trading goods came out. Nothing in the afternoon other than monthly bill auctions and announcements. Bears are trying to get a 10-point move, but you're selling against this leg. So breakout, bar 10, or even 9, okay? And then continuation, there are probably limit order buyers here. Even if it comes down all the way to EMA, probably buyers there. But I did warn you about this pullback at the 38.69. So, but that doesn't mean that there are sellers, strong sellers here. Market is confused already. It's like, what is happening here? But the overall trend, think of this as kind of bullish, but it's still sideways. Up, down, up. I think it's trying to get up to here. 3,900 is always magnet. It has been a magnet for some time. And then you see this right here. There is some kind of a triangle or tight trading range, right? So the middle of that is around 3,900. So that's a magnet. And in fact, it ends up being a 1. This is 2 to 1. Look, 3 to 1 ends up being 3,900. So that's where maybe bulls are trying to get to the 3 to 1, which is right there, give or take. Okay. We just need to see bulls close a bull bar above 38.69 to continue. What if we just trap the bulls here and come down strong? Well, you have a huge leg up. At least the 50% pullback would be the right way to go. But they haven't even moved 10 points. Bears haven't even moved 9 points, okay, to take profit. So they're just scalping. And if bar 12 does not get a continuation bear bar close, everybody who's waiting underneath 12 to sell this with a stop order will exit out and reverse it. Now, why would they reverse? Well, look at this. Outside, inside, another inside. Now, bears are trying to close the bar 13 on its low to sell with a stop above 12, okay, and then break out from the outside bar 11's lower range, okay, and get more targets. So that could still bring them to the 10 point. 10 point for bears is 61.25, okay? So they're trying to get there. They're trying to tag 61.25, which is around here. But say they sold it, but it didn't go anywhere and reversed it. Those bears are going to be quick to reverse as well. Right now, they're trying to close this bar as low as possible to sell further more down, maybe the 50% of this bull leg up. All right, so here we go. They're just about to tag their 10-point target, 38.61, 25. All right, so this is good for the bears. But if this is just a pullback and the bulls are trying to get a high 1, well, we don't have that yet. So still, all right, so they got their 10-point. They're still trying to sell, but we should bounce here. Let's see if we can. EMA is magnet. And I did say here that we have sellers here. Be careful at the low of Globex low range. Bulls want to close above and inside the range, above that blue line or the VWAP, okay, session VWAP, or daily, I should say. Is if we do close above it, then we go up here. It's possible that we go up here. And that could bring us to 2 to 1 and possibly 3 to 1. So, cup needs a handle. That could be the handle. Bull needs the high 1 and high 2. So I think it would be nice if we can actually go up to 38, 74, 75 at least. That would be my minimum requirement for bulls. Bears want to micro double top with bar 11 and prevent the close above open of the day, close of yesterday, and eventually prevent high of yesterday open, but I think we will close above it. Bulls are going for a measured move. They already got their measured move from here, but they want a much bigger measured move. So they need a bull bar close. Say we got a bull bar close right there, stop goes here. That is your measured move, little above the 3-to-1 target for the original measurement that I had there. So everything seems like convergent or right around here. So 3,900 might be what they want. So I would like to see bulls push this a little bit further. Like I said, 38, 74, 74, 50, 75 area, what I like them to test. Or further up to is 38, 77 area would be nice. So what happened here? Outside, inside, 11 outside, 12 inside, then you had another inside, fake break, okay, and then what happened? Market tried to trap the bears selling underneath 12. Was never a good idea. So you got a nice high one there. Now, if you put a buy stop order one tick above, okay, 13, you did not get it activated yet. So can the bears still sell this? It's sideways, okay, it's trying to make a decision here. You got a high one. I like to see bulls actually push this to 75 area. Even 77 would be nice. For the outside bar, like I said, if you measure the outside bar, let me get rid of this for a minute. If you measure the outside bar 11, like the way that I measured, we have not tested the bull trap zone, which starts at 38.70, goes all the way up to 38.7250. So bulls are going to test there before coming back down again. But most likely their first target that they're going for, which is the shallow target, make it or break it target, I call it. What is that? Okay, so it was overlapped. 38.7350 is where they might be trying to go to. But it's just this, we're at the top of this trading range, we're at a level, you know, there's still sellers probably waiting up here from the prior high. So maybe 2 points minimum, okay, right there, they're waiting right there. So we might still test that. Or up to 5 points area, we might still go and test that. Or even 10 points, which is right there. We might go up to these levels. Where would that come? Oh, that's like almost like a 15 point. But anyway, as we go higher, okay, so my first target for bulls, the top of the bar 11, because that's where the stops are. They want to run those stops. And then minimum get to the 73.50 or 73.75. And then maybe even surge up to the 77 area. That'd be nice. But resistance at the prior highs, 2 point above to 5 point above sellers are probably waiting. So you might want to scalp a little bit there, somewhere around 38, 74, 50, 75. Bulls are trying to get a 40 point, which is right there. It aligns very well with that 2 to 5 point mark. So these bulls are trying to get there and take profit. So that's why I kept saying 38.77 is, okay, it's a good place that they could test. They're struggling here. you can see that we are stuck inside. We got another outside inside, 13, 14. Bears still want to close, take out the inside bar 14's low and close the bear bar and sell and test the bar 13 low. All depends on how this bar closes. If it fails to close bearish, no one's going to sell it. They're going to look for a quick breakout. But yeah, we just need to be patient. I really would like to see bulls to take us to the 38, 73, 74, and 75 area and then continue into 77. I'd like to see bulls to take us to the 38, 73, 74, and 75 area and then continue into 77. But we are in some kind of a sell zone. I like to see a continuation on the hourly chart to, again, 74.50 seems like a good place, or 75. The moment bulls close inside the Globex range, okay, they could easily take us up to here, be careful, which is the low of Asia. I'm sorry, what am I saying there? Yeah, low of Asia, that gold solid line. Middle of Asia, US Open. So this area becomes, okay, magnet and also resistance. This is the area where I would like them to get the market to, so get the price to, so we'll see. But we need a bull bar closing. It's a pullback, cup, handle. Okay, now their bulls are showing us an inverse head and shoulders. Small cup, big cup, a smaller cup. Finally, we get a breakout, you get your measured move target. Okay? Much bigger measured move. Oh, goody. Good. Keep moving, guys. Come on, don't give up here, bulls. Close above right here, 38.69. If they close it, we should get to the 38.75 possibly. We need one bar closing above high of yesterday would be a good sign, but still, bulls are not going to be out of the woods until they give us a really good bull bar, bull close. So we have a small triangle here. Okay, we're stuck in this. We need to break out of this. On the triangles, you get 3 touches, 1, 2, 3, and then you get 2 touches, 1, 2 before breakout, or the other way around. You get 3 touches, and then, sorry, that's not what I'm trying to do. You get maybe 3 touches, and then you get 2 touch, and then you get a breakout. But it keeps, even if it breaks down or breaks up, it's going to want to come back to the apex. So it's trying to make a decision about how they're going to handle this 38.69. It'd be nice if they can actually close above it. What if we get a full rejection and a surprise bear bar? Well, then we look at the conditions and we decide whether it's worth selling, right? So we have outside bar, another outside bar 13, inside bar 14, and no bear bar closing. 15 needs to close really bearish on its low, or take out the 14 low. See, it closed on its mid-level. It's bearish enough, but it's not that bearish enough. Bears want a double top. They see the double top, but they don't see a strong bear bar. So this bar now needs to be a second bear bar in order for them to consider selling and scalping at these levels. That would be the breakout, but even that breakout could actually go right back up. So you can see that there's a possible inverse head and shoulders here. Or it's going to fail and we're going to sell because it's a trading range. I'm bull biased. So I still want to see at least this 74.75 area tested. 73.50 to 73.75 is the first outside bar. shallow target, make it or break it. Bulls need to show me that they can close the bar and get to up here. So 73.50, I said right there. Look, we're going to test that. That's it. First scalp. If we get above it, we'll get here and a measured move target. So that's why I said 77 is crucial. But first, 75. I am long. I bought into the stop right there. And I want to scalp right here. It could continue further high to 38, 80, 81 area. But first things first, we haven't even touched that target yet. So this is first, 73.50-ish. But I like to see 74.50 tested. See if they can make this. Bulls are having a hard time closing a bull bar above high of yesterday. But that's the magnet. We test above it. That's not good enough. We need to close above it. That's what we need. So that right there, what's happening? That's a trap zone. That's the first time we're testing. Actually, not the first time. We tested once. We tested twice. So I think the bulls are going to close and get that, and we're going to end up going up here and there. So they're testing 10 point. They're trying to close that bull bar above 71.25 area. I did say we're going to test 73-ish. But really, I wanted to see 73.50 tested. There's still time. There's still a minute for bulls to close this bar on its high. It's resistance. And I did say that there are probably sellers trying to prevent this breakout. So let's just give it a moment, because I think bulls need a bar closing above 38.73. If they can get that, then 77 is next. And then we can even break out further higher towards 38.82, 38.86, 75. Or we're going to fail here. Small trading range. Where you see what happened there? It's a breakout for triangle, and we come right back to the apex again. So let's see if they can find buyers here. Trap zone, trap the bulls, but it's not the end of it. We're still in the buy area. They're looking for a pullback. I want to see 38.74 and 75 still tested. So let's see. See what's happening at the Globex? We still have not breached inside the range because bears are trying to prevent that from happening. Could this be a leg in a trading range and then we come back to the 50% of this trading range? Yes, we can. But first, bears need to show us that they can not only close this bear bar down here, they can then come down and break out from this end. So bulls failed several occasions. Bears might have run. I actually ended up exiting out as this came down. My long. I scalped up there a little bit. I didn't like what was happening at the high of yesterday and a little bit above. I managed to scalp. Then it came down. I didn't like it. I didn't like the way it opened. So I exited out. Because I'm trying to buy early and looking for a good reward, but if market is not ready to give me that, I can't force it. So let's just wait a little bit. So the bulls want a double bottom with 14 low, and trap the bears. They can get their breakout if they can actually close a bar above 38.75. But that's not enough because above still resistance, and it goes, bulls can push those all the way to 38.81, or maybe even 82 would be my target. 38.82. Sellers are waiting there and above. So there are gaps there. If you look at the ETA chart, there are gaps there, bear gaps. Sellers are waiting there. So it would be better to trap the bulls around there, not at the weave up. All right, so let's see if they can make it. So that was your high one. Bulls are looking for high two. High one, if you bought above that bar, you actually got a really nice 4-point and an extra quarter. Is bulls want a high two. So here's a pullback. And can they buy one tick above the spare bar, 17? It would be difficult because it's sideways bars, but spike, pullback, and channel. So the bulls might be wanting to go up and test here and get a wedge. Okay, and then maybe reverse, maybe like a 2-point above this high. Bears are trying to scalp here, trying to get there, or 1 point somewhere here. If they fail, bulls are going to take over, but they came so close. Let's see. That's what the bears want. They want to test that. They got their scalp. EMA is magnet. The range, 50% is right there. Also, swing bulls need a pullback, double bottom at the EMA, and a high two, bull flag to get up to here. So they're still looking for buyers, most likely. And bears are scalping the 10-point, move down from that pivotal level. It's a double top. Now, you could also say, hey, this was actually the triple top, or 1, 2, 3, or 1, 2, 3. So testing this right here, 13 low, is what they're trying to do. Or they're going to come all the way down to here, to the 50% of this range. But the bulls want a pullback. They need a cup and handle. And if they see this as a flag, okay, then they need a double bottom at the EMA to start swinging. This is a good pullback for them at a key level, but now they need to show us bull bars. I was already disappointed with what happened, that they couldn't get above the high of yesterday. Now, if they fail again, I'm going to lose interest in bulls. So the next place that they want to go is 38.59 or 59 or 58 area, which is a 15-point. Or if you say, hey, you know, I sold underneath that bar, or here, that's my 5-point scalp. I want to get a 10-point. 10-point is right here. That's it, 56.50. And they can even get all the way down here. All right, so they're getting there. Measure from there, a little bit more maybe, push, and then a 50% of this trading range, pull back. So it turns out now we have a trading range. We could not break above high of yesterday. What can happen here? Well, we could still continue to sell into this area. And I was afraid of this, not being able to get back into the Globex range. And, you know, resistance right there, I said there are probably sellers waiting. So bulls tried once and twice and they failed. So are the bears actually swinging this down all the way down to here? Well, they're going to have to show me. They have to break this 50% level with a good bear bar before I would think that we're going to come all the way down here. All right, so we have a full test of 14 point. Now, if you actually measure, look what happened. This was the bar, right? This was the outside bar. Look what the bears did. Look what they're testing. Why did this happen? They sold underneath this bar, right? They trapped, they run some stops, trap the bulls. That's a trap area, 111 to 88%. They failed to tag that, so the bulls failed, and that's where I was upset. So I got out of my lawn. And then this is where you reverse. You see this bear bar, you sell underneath one tick, and then you sell into the low, okay, of this bar, and then look for a breakout. We have a breakout. We could end up coming here. So, yeah. But they need a bear bar closing right there and then continue to sell. If they cannot do that, then we're going to go right back up again. So that was the test, and now they want to close below it and then come down to, what is that? 55.25. But I need the bear bar close, otherwise I'm not interested. They already activated the sell stop orders underneath bar 18. One tick test. But here's what's happening here, guys. Look at the EMA. I'm going to get rid of all of these. I'm going to get rid of that. Look at what's happening here. The 20 EMA and the 1 hour EMA is sideways, okay? So we're in a trading range. When they're parallel to one another, two EMAs. When that happens, above the 20 EMA, market is going to look to sell strong bull closes. And if price comes down and here, they're going to try to look to buy strong bear bars, okay? So right now, these bears who sold, they're taking profit of 15-point zone, or if you measured from here, that's a little over 5.6, so they still have a way to go. They could still come down to here. But I measured from here. That was just about 14. It's not even fully 14. So it's got a room to come down. Come down to here. So say this was high 2 and it failed. Okay, high 1 and high 2 came down, high 2 failed. We went below this now. Okay, so could this be just a pullback and we get a second leg down? Yes, we could do that. That's why I think these bears might continue this down. But I need a bear bar closing below 59, 38.59 first. Otherwise, we could go higher and then come down. Or we're just going to get a double bottom at the EMA, and we're going to break out as a bull flag, take out that high, break out, and go further. So I can't buy until this bar closes in 15 seconds, or sell. So far, I expect sideways due to EMAs so close to one another and go in parallel. So I prefer bears to move the market down here, give me a strong bear bar, and then after a second leg, bulls to show up. 19 is not an inside bar. It went one tick below 18. So there are a lot of bears stuck here now. They sold one tick below 18. Bear's trying to get some kind of a bear flag at the EMA. They need to break the low of 19 with a bear bar to continue selling into the 50% pullback of this trading range. What if we just get a 1 bar second leg and a failure? We get a micro double bottom and a higher low, and then we trap the bears and go higher. That's fine. That was my original plan, to go higher, which I'm bummed about. But at this point, it'd be better if the market sells into this area first and then traps the bear and then goes higher. This area first and then traps the bear and then goes higher. So trading range, sideways. Let me see. Here we go. They're taking out the 18 low, 19 low. So those bears are now making money. That's the second leg. Be careful. Second leg could be just a 1 bar. Or it's just going to continue. If they can close this bar closer to the low of this bar or underneath 58, they can continue to come down to 38, 54, 55. Or I'm going to do a lot more conservative. See how I'm finding I'm excluding the wicks, and I'm only taking the bodies, okay? And look where the midpoint was, right there, 50%. We just tested the 50%. If you don't go extreme to extreme when finding your trading range, look where market found buyers. That was the second leg trap, okay? Well, we don't know yet. This bar hasn't closed, so bulls might be trying to get that bull flag, but they need to close this bar on its high. And if you, again, measure, see, that's a 15 point right there. I did say that they were going to test it. Or if you measure underneath where you sold, they almost made 10 points. Not necessarily, but, or if you say you sold here, then they made 10 points. 9, 10, give or take, but not fully 10. So that means the bulls are in, and they might try to. Well, let's see if they can push higher. It's a critical area here. So according to my trading range, this was the 50%. We bounced. So for 10-point bulls, they're trying to test starting 66.50 to 67.50 area, or 66.25, 67.25. They're trying to tag and take profit there. It could continue higher if they can close above 66.25 with a bull bar. We need at least 2 bull bars here, get above this area, and then see if we can actually test once again high of yesterday. Second entry bulls, they entered with stop probably underneath 20, but it's a difficult place to have stop because we have not tested the highs and we're closer down here. So if you put your stop down here, okay, you're basically swinging this, right? Bigger stop, bigger risk. You're trying to get a bigger reward. So remember, we managed to, where did we measure? So we measure from here to there, right? So this was 1-to-1, pull back to nearly to, 50%. So the swing bulls, they're still trying to get back up here, but they needed that pullback. So now we have inverse head and shoulders a lot more defined, like I was talking about earlier. So high of yesterday is still target. It's just, and then up here, I'm going to get rid of this. This is the 2-to-1 still. But first, 67.25, 66.25, 67.25. Let's see if the bulls can actually get this. They need to scalp. They need to close a bull bar there, or they're just going to fail, and then we're going to come down again and make a double bottom, and then try bull flag, double bottom, or 3 wedge, push, maybe, before going back up. So bears who took out this low, okay, they're trying to swing down. So if I actually measure, you'll see if they put their stop and they took this out, they're trying to come down to here. Bears are trying to come down to here. But it's kind of difficult. Maybe they would end up coming down, let's see, 38, 83.75, 84 area. But bulls are going to want to stop them because this is they're trying to get their swing. They're trying to get their swing. And bears look at this as, well, maybe this is the final push, but they're going to push anyway. Final push, but they're going to push anyway. Because of the bars going, EMAs going parallel, I think the bulls are going to want to buy a strong bear bar close. So there's a fight going on here. Market is trapping the bulls, trapping the bears. Haven't made a decision. If you want to buy, I think better to wait for a bull bar closing above the blue Globex range low line right there. Then you can expect we're going to get back up here. Otherwise, bears want to swing this down all the way to the lows. This down all the way to the lows. So it's coming to the second hour close soon. 10 more minutes. Try to find trading range. Bears need some kind of a bull flag, 3 push wedge. Okay, so bar 22 is a strong bear close, but I think it's going to get, it might get continuation. Bulls are trying to get a bull flag. Yeah, I'm not interested in buying this yet. There's, I have to be patient here because bulls couldn't manage it. Even with this bar 20, they just couldn't. So I think the bears are still trying to break below 59, 38.59 with a bear bar and come down to 38.55 area, even possibly 54 area. So without seeing a strong bull bar taking out these levels, I'm not interested in buying. This is trying to come down. All right, so let's see. Continuation to 55, perhaps, which is right there. And that will give 1, 2, 3 push. Or double bottom wedge bull flag. Bulls could trap the bears, but I think we should come down a little bit more. Bears trying to get down to here. It's also 11:30, so it's the end of the hour. I like to see bears actually sell this all the way to 54 and not give up here. But let's just wait for this bar to close. If it closes bullish, I'm interested in for bears to really bring this price down to the 55 and 54 area, but if they close this bar bullish, then you've got a small trading range here. They're buying at the lows, selling at the highs. And, I can't really sell it. That means this bar, the continuation, is not happening. It's very difficult. So could we get a swing long here? Yes. It's almost 11:30 and we have some kind of a wedge. That is a higher low. 23 is a higher low. And the bulls are still might be trying to get back up to the highs and break out and get to this here. Get to this area. So I think I'm going to wait for, what time is it? Or is it this hour to finish? So that is a really nice, good bar. It's an outside up bar, actually, but it's testing this trading range high. So it's difficult to buy it. You got to wait for machines to try to sell the close of that bar, 23. Okay. That was a breakout for bears right there, breakout point. So they're testing. But if there are no bears here, and then suddenly we close the bar up here, there's still plenty of time for bears to actually sell. I don't like to sell bars that test these highs or breakout points. I don't like to buy those bars, I'm sorry. And look how that bar opened, 24, all the way down here. So the machines will sell it, right? So it's also parallel to EMAs and strong bull bar. Above the EMA, they're going to try to sell it, and that's what they're doing. Well, now I'm bummed out about bears not able to come down to where I wanted them to come down. So I think it's better to stay out of this until we get a clear direction or some kind of continuation. So if I want to be a buyer, I'm going to be actually looking at the Globex chart, and I want to see bull bars actually start to close here. Otherwise, you're just going to bleed out. You're going to keep doing the wrong thing. Yeah, so you do have an 00, 22, and 23. 22, identical highs with 21 but it doesn't matter. It's an 00, so it's a breakout. You also have an inside IOI, 22, 23, and 24 at the moment. So it's a breakout mode. It's going to break out eventually or down. When market is making double tops and double bottoms, okay, it's basically trapping everyone. So it's better to wait for a clear direction. You got a micro double top, you got a micro double bottom. You sell, they trap you. You buy, they trap you. That's why I said it's a limit order, limit order market. So they are, they're going to trade like the limit order, right? Sell from the highs, a strong bull bar close, buy from the lows, a strong bear bar close, so and so. But we do have what seems like a double bottom bull flag. We just need a confirmation. We need this smaller structure to be broken with a bull body, but that's not enough for me. I need to see a bull body closing above the Globex range low and inside the Globex. Then I'd like to swing this, but I don't see it, so just have to wait. Okay. Now for bears, today is a little bit lower than the body is lower than its midpoint, but we might end up going up here if bulls take over. It might even go all the way up here, but I doubt it. So we have to really break out soon and the rest of the day will become bullish and get a measured move to the upside to 3,900. That would be nice, or we're just going to stay sideways. But we get a nice cup and handle here and a double bottom, bull flat, which is a form of a bull flag, okay? So it's like this. I'm looking for a W pattern or double bottom, okay? Or maybe here, that's the high of the range. That's it. So go up, break out. That's what I want to see. But market needs to get above 23 high with a bull close at least minimum. So now you have outside, inside, you have IOI, there it is. We're getting a breakout. We have an IOI breakout. I like to see market get to the 38.71 and then the 74. That would be nice. Can they make it? The spark closes bullish on its high. We have a breakout. Stop goes underneath 24 or 23 low, and you look for a 1-to-1. That comes just about 74.75 area. High of yesterday is magnet. Close of yesterday is magnet. They need to close above if they want to continue higher. So the bulls really need to show us now that they can break out, get to the 38.73 once again, close above, test 75, break above without getting rejected, which is tough because they're going to find some sellers there. And the target is 38.77, but it's just sideways right now. Like I said, I'm looking at the Globex chart. I need bulls to close a bull body above that VWAP and the blue Globex low line and start closing inside and show me some bullishness all the way up to here at least. Now, if the bulls who bought above 24 and their stop is here at the 24 low or the 23 low, they see that area taken out with a bear bar, they could reverse it and sell, okay? So what happened here is that many of them are stuck. They might have already scalped this, okay? So this is an outside bar, right? If you actually do the exercise that I've been showing you guys, why is this bar coming down? Because it tested and target and it trapped the bulls. So if those bulls scalped there because they knew, and then now they see that that 24 low is taken out, and they see a bear body taking out that 24 low, they could reverse and then look for these targets to be, hit. So that's how I know if a breakout is failing after an outside inside. They got what they needed. If you actually measure from up here, okay, that is 2 points. Okay, one tick above, 225, right? So it's a 2-point scalp with extra 2 ticks, but that's all the bulls got at the moment. Now, those who have their stops down here, they're still waiting for bulls to keep going higher, but this is a sideways market now. With expanding triangle. So they need to make a decision. Some bears probably reverse this and they want their reward, which is they want to test 38.58.50 or 58.25 area. They're going for it. Why? Why there? 10 point. Or if they sold that close, they want at least a 2 point. So they want this area to be tested. They want a 2 point scalp with an extra tick. At this point, I'm not trading this. I'm done. Because no matter what I do, I'm not getting a breakout. So it's one bar sideways. It's very difficult. Market hasn't decided what it wants to do. It's better to stay out. See you tomorrow, Richard. I mean, this is just at the moment I have to be patient here. But it's a double bottom, higher low. If bulls get another bull bar close, hey, that's good. They could still go up to 38.71, 38.74, and then maybe even 82. I just want to see bulls on the Globex giving me the chance that, to see that they are becoming bullish. I don't see it. So maybe now there's 7 more minutes for this 15-minute bar to close. It's a 1 bar going sideways. You're getting 2 bars here. That's about it. But it's just very unclear. All right, so higher low. There you go. The resistance at 38.73. Bulls trying to close inside the Globex range. They have 5 minutes to do that. 5 minutes to prove us that they can actually get this flag and an inverse head and shoulders finally get activated. So I'm going to get rid of this because this is still 2 to 1. Even if you say, hey, what if this was, look, they actually tested the swing pullback level in a way. Okay. So say the stop was above bar 3, okay? So we need really bulls to show up here if they want to get up to right there to 38.94. Otherwise, it's just going to stuck in a sideways. I have a chart that I was going to show you guys. Hang on. Okay. So I have a trend from the open, right? And reverses back up. This one took its time, but it did go above prior high. Even went above the bar 1 high. This one also did go above the bar 1 high, but then it went sideways. See? And then came down around here, found buyers, and bounced again and test the high. So I don't know if we're going to get this. And then tomorrow ends up being a bullish day at the open with a double bottom at EMA and a gap. So to me, this is bearish market. I'm no longer really bullish. I mean, we're pulling back to certain highs and then selling. We could still go up to where those levels I talked about, 38.71, 38.73, but I'm not very confident anymore. So we have another outside 25, inside 24, and another inside 26. Okay, so bulls are trying to close this bar 27 on its high and breakout. Fine by me, but they need to get to somewhere. And the machines are doing what they do best. As soon as they see a strong bull body close above EMA, they sell it like 20, like 16, 20, 23, 26 close. Okay, finally, we're getting something here. $71.50, 73 are still targets for bulls. They need to break out here. Slow motion. For bulls, point counters, 71.25 is target. But it's really weak price action. Buyers above 26, they're trying to make money here. Bulls are trying to get continuation here into the 38.73, but it's that's a good signal bar. Bar 27, but we're at the highs again, makes it difficult. We should get continuation a little bit. Bulls failed to close above close of yesterday. Another, like they couldn't even do that. That bar 27 did not close above close of yesterday, even open of the day. We need to close above it to become bullish. But look what's happening on the Globex. That's good because now bulls want to buy. Okay, let's see if they can push. They closed that Globex bar is right at the Globex low, but still not good enough. I need bulls to show up here. Then we get some kind of a measured move to the upside. You're not going to get this 2-to-1 unless we start to close above 16 with bull bars. That's it. Now first, these bulls are going to scalp no matter what, 71.25, maybe even 73. So for them, target is 73. If they start to close above 73, then they're going to get to the 77. And if they start to close above 38.79, they can actually start to swing into 38, 82, and 86 and measured move 91.50 or 91.25. So mark your charts. Bulls are trying to come in. If they fail this one too, then we're going to come down. And the bears are going to swing this down. Tough resistance here. There's a gap here. Bulls are trying to close it, but very difficult. So what happened there? I said that was a problem right there. Bar 27 is a really nice bar. I like the fact it's a good signal bar, but the problem here is that it's right at the top and market hesitated buying. They didn't see something very basic fail to happen. Basic requirement, close that bull bar above close of yesterday. Now, I wanted to see bulls actually test 71.25, but they ended up testing a little bit below. So this, they can't get to my targets. My regular average scalp areas I measure, I can't even have bulls get there. So it's better to stay out and wait for a breakout somehow. Yeah, they just sold what looked like a really nice bull bar above the EMA. I did warn you about that. They're going to do what they do best, like they did with the 16, 20, 23, and now 27. But the moment this bar closes bullish, if it closes bullish, okay, so there's a potential break of this resistance, okay, right here. So bulls might be buying these pullbacks, but I am not. I am flat. I sold here, made money. Bought here, lost money. And then reversed, lost again. This is where I got out. I was done. 2 strike, I'm out. Otherwise, I'm going to bleed out. I have to stop. I was long here, making money, so that was really good for me. So that kind of offset all, 2 losses that I took here. And they were small, but still kind of ate into my profit there. So I'm just going to wait and see what happens. Because if bears want to swing this, they're going to have to show me. It's a double top, maybe lower high, and they want to sell. They're going to have to break this neckline right there with a bear body. They need to break this neckline, retest, and then start to sell again and swing further down. But given the fact that we have two moving averages sideways and parallel, buyers are probably down here in this trading range again, if we do come down here. I will have Brad coming after me, so don't turn off your webinar. Don't sign out. He'll join us midday at noon or thereafter. Yeah, it seems like they're trying to break out, Roy, but we just have to be patient, right? So we got to pull back to the EMA once again. But we have not squeezed these bears out of the market yet. So bulls failed again. You got an outside, you got inside, outside, inside. Good bull bar, another one. Look, they bought this and got nothing. So now they're trying to reverse it. They're worried that their stop might be underneath maybe 26, okay? So these bulls are worried, most likely. If this bar closes down here below the EMA, they're going to be very, very worried that bears could sell this. This is a really bad day, but it's a good learning day when you have this, right? So you get closer to the lower EMA that acts like a safety net, and then you can buy there and scalp into that EMA and see what if runner could run further more up before the sellers show up. So anybody bought above 26 or the close of 27 disappointed, and now they see two consecutive bear bars, especially 29 ends up closing below EMA. They might exit out, who knows? Or they're going to look to maybe buy again here, but stops are here, either 26 or down here. Bears want to break this neckline or that neckline and get a measured move down. All the way down here to bar 8, in fact. Buyers are probably waiting there. Okay, in this area. It's tough for bulls. So, and I kind of proved myself that buying here failed, buying there failed. So I can't. Bears are trying to get continuation. Tough. I will be interested in buying yet again if I see a 15-minute bar closing inside the Globex range. Okay, that's what I am interested. Otherwise, I'm gonna wait. There's a triangle here now. I'm gonna wait. There's a triangle here now. Maybe. You got 3 touch here. You got 2. So breakout is coming. Look at the Globex chart. Bulls are still trying to close that bar. They need to get a second consecutive bull bar closing above the VWAP. but they don't even have one that closed inside the Globex range. How reliable is this? Don't know. 3900 is magnet, okay? So, that. This is also target, which is only 6 points below the 3900. So we might actually reach there if bulls finally get a grip here. Or we come down, because it's a trading range, we come down to here, buyers are here, and they're probably going to bounce. 3900. So we might actually reach there if bulls finally get a grip here. Or we come down, because it's a trading range, we come down to here, buyers are here, and they're probably going to bounce. So I'm going to measure my trading range once again. Bears trying to get second sell, which they already got. So what they want is a 5-point minimum scalp from there if you measure. So they want to come to here. Underneath 28, they already started to sell. So their 5-point is just around there. But they need to close that bar now below the EMA as bare as possible. Then the 10-point continuation would be 9 is right around there below the 50%, and 10-point is underneath. So I don't know if they're going to be able to make it, but if you think about this from the highs, that's your first sell. It's your second sell, right? So we made a new high here. Bulls failed. First entry, second entry, they failed. First entry, second entry, they failed. For bears, first, maybe second here. We'll see. So 5-point measure from under 28. See if the bears can get it. Yes, you can. That means you're looking for 6-point close. You didn't get there. But this one is trying to close it. If this bar 30 closes, a bear bar underneath where I just marked, 6 or 6 plus right there, then they're looking for, that's it, they just did close. So then they will come down here 10-point. It's right at the edge. 3 bear bars, all 3 are closing on their lows, sideways and down, but nothing closed below EMA. I would like to see bears actually take over now and come down here again. If they fail, sometimes you get a move 6-point, 5-point, an extra 1 point, but they can't seem to get down here to take profit. And then suddenly you see these prior highs taken out where you measured. That means bulls are in and they resume their trend. It's just a very messy one, very difficult one. But since bears got 3 bear bars, that's momentum for them. Okay? It's just that they couldn't close it below the EMA. They couldn't close it below the EMA. And anybody who sold here, they still want some kind of a scalp, and they haven't got that. So 5-point and the 10-point kind of in the same area. Leg 1, maybe sideways, maybe we get another leg 2. This one, leg 1, pull back with 30. Can the bears give us another leg 2, or was this just a leg 2? Not only a pullback with 30 and then leg 2. So now you have another inside, outside, inside. What's going on here? Bar 29 is inside, 30 is outside. Still in a breakout mode, still trying to break out from somewhere. So if I was going to sell this, if I were to sell it, I would have probably sell stop order here. I would want to see bears actually activate me. It's not too far away rather than selling the close, because it's a 6, not 6+. So bears really didn't do that well there. So if market decides to go higher and take out that high, I've never gotten activated. I don't need to worry about it. But anybody who sold underneath 28, they scalped. And that was a painful one because it went against them first. Okay. It's actually 225. They got a solid 2-point and extra tick. That's all they got. So it's very difficult to do anything. Now you have another bull flag. What happened to bears? Well, they need to close down here. This right here is now scaring these bears. If they're still in their short, their stop is here, and now they're worried. Now they're looking at, wait a minute, it's an inside, outside, inside, and bar 31 is trying to close as high as possible. Well, I think my time is over, so I'm going to end the session, everyone. And I'm going to sign off, and Brad will come in. So I will see you guys tomorrow. I'm still looking for bulls to break out here, get that double bottom bull flag, test that 38.71 and further high, but we'll see. It's a terrible price action, but there's nothing we can do. You just trade what's in front of you. Or just don't trade it, just wait for a clear breakout. All right, you guys have a good day and see you tomorrow.
Everyone, just give me a few, just 1 or 2 minutes here. All right, hope everyone's doing well. So clearly we're in a triangle type trading range, and we've had a big move up, big move down, big move up, and sideways, hovering around the open of the week. Probably going to go sideways here, and I still think the market may try and break to the upside and get a second leg here, but this is making the market 50-50. Triangle type trading range. You can see a trend line here, and a trend line here. So the market is in breakout mode. I'm long, but I'll be very quick to exit. I'm betting that the market gets a second leg. And I bought. Sometimes I'll try and explain this, but I got to pay attention at the same time. Sometimes I will take a chance on a 1-minute chart when the market gets a bar like this and buy the close. And I will be very quick to exit. In other words, as soon as this, and I don't recommend most people do this, but as soon as this bar closes, I want to give the market seconds before, maybe a few seconds, and if it doesn't break out to the upside, I'll be quick to get out. So the market is trying to break to the upside. I'll explain the thought process of what I did as soon as this trade is over, but I don't want to multitask too much. The bulls need a strong bull close here. They need a bar closing on its high, preferably above the bar 28 high. And it'd be better. The bigger the bar, the better. So far, this is looking good for the bulls. Okay, I got out basically break even. So obviously not what traders want. Now it's a wedge. 1, remove this. Now it's a wedge, 1, 2, 3, and a double top with bar 16. So the bears need this bar to close on its low. Tail below 34, so disappointment lowers the probability for the sell. Tight bull channel, some bears will take it, betting on a downside breakout and test of the 20 low, 23 low. Bears see this as a failed breakout of a triangle. The bulls broke to the upside. So you can say the triangle was here, the bulls broke to the upside, the market failed, and now we're trying to go the other way. So for the bears, I think it's reasonable for bulls to get out below 34. Some bears will sell below 34, stop above 33. And the bears are hoping for a downside breakout down to here. So an important bar on 35. Will the bears give up, increasing the odds? Will the bulls give up, increasing the odds of lower prices? Or will the bears be disappointed, just like the bulls were disappointed up here? Give me just a second. So far, the bears are doing a good job, but they need this bar to close on its low, or with as little tail as possible. I'm not talking right now because I am short and I'm deciding what to do on this bar. So it basically sold the pullback of this bar right here, which is in essence selling the close of 34. Okay, I just went flat. So I will review everything in just a second, but I want to talk about one of the things I like to do that can be helpful is, let me back up here. The bulls broke to the upside, and I mentioned right here, this was basically the first minute of this bar right here. Right here was the first minute of bar 33. And I mentioned how when the bar closed with the first minute, it popped up pretty quick. So I bought the close because I was confident the market would at least go a little bit higher. And when it started turning down, I basically got out break even, maybe a couple ticks loss. And because it failed, my thought was the market was going to try and do the opposite. The bears had several attempts, 1, 2, 3. They had a triangle, broke to the upside, failed. So when the market started to pull back to here, I thought it was reasonable this would get a second leg. So I just used the 1 minute chart just to get a better entry. And sometimes what I'll do is, you can do the same thing with 5 minute, is paying attention to pullbacks. When you get a pullback intra-bar like 35, it's the same as it's pullbacks. It's this right here. This is buying pressure, and it increases the odds of more sideways. Now, I don't want to spend too much time going on the 1 minute chart because it's more important to focus on the 5 minute, but it can be helpful to understand the structure of the bars. How the bar is forming is really important. 35, this tail has meaning. This tail is buying pressure, and it's a double bottom. So it does have importance and meaning. Now, with that said, it's important to understand that even though these are tails, it's basically a wedge, 1, 2, 3. However, this is a parabolic wedge, and parabolic wedges are minor reversals. The reason why most of them are minor reversals is on the next higher time frame, this is what you see. So is it always in short? I don't know. This may just be a sell vacuum to the apex of the trading range. I think this is strong enough for a second leg down. However, I sold here. I wanted the market to race down and get consecutive strong closes. So in other words, I wanted to see this. Strong breakouts do not pull back all that much. In other words, you can look at a 1 minute chart and see. So here's a strong breakout, another big bull bar, two big bull bars, big bear bar, pause, bear bar, and then a pullback. You can see that on a 5 minute chart. So did it sell to close on 36? It probably is. The risk the bull's face here is a double top, it'll break out of a triangle. I'm going to go ahead and delete that line. But it's a double top, it's 3 pushes up, 1, 2, 3. Therefore, there's the added risk of a downside breakout. And it's possible the market gets down to here, although I think it's unlikely. So there will be some traders selling, betting on 3 consecutive bear bars, closing below the midpoints, even though there's a tail here. And the 4-bar micro channel increases the odds that the market will get down to here. What about the argument that this is a strong enough breakout that it's likely to lead to a second leg? Well, that is probably true. But the issue the bulls have is this was bar 11. We're now on bar 36. So the bears have, the market's been going sideways for quite some time. And this was the first pullback attempt. The bulls tried numerous times to break to the upside, break above the open of the day, which is also the open of the week, and they keep failing. If they keep failing, that means the market is going to probably try and do the opposite. So probably sell the close, stop up here, betting on at least a small second leg down. Now, one thing I mentioned over here was I thought this sell-off, if you go back and read the intraday update that was released around bar 18, I mentioned how this was a strong enough sell-off that it was likely to limit the upside. As strong as this rally was, this would be more likely to lead to a bull trend day if this did not happen. Bars 1 through 6 lower the probability of the day being a bull trend day. And the reason is bears will see this as the market being in either a bear trend or a trading range. So therefore, they will sell. They'll sell above bars. They'll sell at a new high of the day. The bulls will see this as either a bull trend or a trading range, and they'll buy below bars. That increases the odds the market is probably going to go sideways. I would not be at all surprised if we got back down to the 9 close. It's a big bar, and traders that sold this close got trapped on 10. Often, when you're in a trading range, the market will allow you to get out, break even. It'll be forgiving. So we could easily sell all the way back down to the 9 close, or even the 8 high or the 7 high at some point today. However, it's too early to tell if this is the sell-off. But at this point, I think most bulls should exit here. I think there's too much risk of a downside breakout, and the odds are the market will probably try and form a lower high. Weak bull close for the bulls on 37, but it's bad follow through for the bears. Probably a minor reversal and at least a small second leg down. So not a great buy above 37. Probably sellers above. Some bulls will buy below right here, betting on 3 pushes up. 1, 2, 3. they're betting this is the third push, and you will have bears who will short this bar and target the low of here or here, betting that the market's going to retest the third push. Bulls will buy. They'll buy the test of the third leg, which is either here or here, and scaling lower, so the market's probably going to go sideways right here. I still think if I had to do anything, I think I'd be short looking for a second leg down. But you need a wide stop, and it's better if you can scan on lower, middle of the trading range, so not ideal for anything. Now the bears, they're trying to get a low one short, and the bears want to limit consecutive bull bars. They especially want to limit this bar, the current bar, from closing above the prior bar, which is bar 37. Prior hour was an inside bar. You can see the low of the bar is 60.50, which is right here. So the market will probably get below the bar 25 low at some point this hour to trigger this bar and prevent it from being another inside bar. It's possible that this will be an inside bar, but I don't think it's likely. You can see the market is testing the 34. Let me fix my screen here. You can see it's testing the 34 low right here. Some traders would buy the 34 low, scaling in lower, and they're disappointed trying to get out break even at their first entry. You'll have bears who went short below 34. Some of them take profits here, and when the market gets consecutive bear bars, or 2 or 3 consecutive bear bars, a lot of them, you will have some bears move their stop to break even right at the 34 low. And if you've heard Al, you'll hear Al mention it. It's really not an ideal thing to do. A lot, especially in a trading range. It's reasonable in a trend. However, buying above a bar and moving your stop to break even right at the signal bar high or low is typically a bad idea because the market's going to come back to it. So if you sell below this bar here and you move your stop to break even, you get stopped out here. Yeah. Now, at times when the market does not stop out the break-even traders, it increases the odds of lower prices. So let me draw this line. You can see we're getting near the 60-minute low, and we're probably going to go at least one tick below it and trigger this bar. Excuse me. I think the more important price is this area right here. Okay, we triggered below it, so probably some buyers I sold the close of this bar and more above this bar, and I'm looking to take profits right here if the market starts to stall. And often I would use a 1-minute chart and just to really see, well, hang on a minute, give me just a second, I'll talk more about it. I need to think about what I'm doing here. So often I would glance at the 1-minute chart if I'm short, and I'll take the trade based on the 5-minute chart, but I will often just glance at the 1 minute because I want to see the structure of this. So the sell-off is tight and it's good. The market's not closing, it's not triggering above a prior bar, but it's still a sign of hesitation. Now, okay, give me just 1 second. Okay, I just got filled. So why am I taking profits at this low? Well, bottom of the trading range for the past several bars. My other problem is I do not want to sell in what's likely to be a trading range day. So I think it's possible we get down in this area, but to me, a lot of traders got trapped. So let me adjust a few things here. So let me do this. Give me 1 second. So possible measured move. I'll keep that drawn. But my biggest problem is this is a strong enough breakout for a second leg. Now, granted, it is 2 legs down and it's parabolic, so it increases the chance. And it's also a parabolic move at support. It increases the chances of this move failing. And my problem here is it was reasonable to sell. Traders got trapped. Some bears sold this close. And if they sold this close, they were betting on. So they sell, scaling higher. Maybe they sell this close and they get trapped on this bar. What are those traders going to do at the close of 9? So if 10 closed on its high, granted, a lot of those bears would exit. Some of those bears, though, maybe institutional bears, would scale in. And maybe they would use a stop, something like this. So use a stop. They'd sell here and use a wide stop somewhere up here, betting on a trading range day. Those bears that sold got trapped here. What are they going to do if the market gets back to the close of this bar? So in other words, this close is going to be support. And that happens all the time. Big bear bar, traders. And if you, I know it seems kind of backwards thinking, but most breakouts fail. So the trader, they buy this close, they're trapped here. This close should have been support. Price broke below it, so if it retests this close, what's it going to be? It's going to be resistance. And notice what happened right here. A bull bought this close, disappointed. When the price comes back to it, they're going to sell. Bears know that. They're going to sell, scale in. And look what happened right there. Price came back to it. This bar, climactic, should be exhaustion. Traders sell the close. And maybe they used to stop and measure move. Up, they sell, scale in. Look what happened from bar 13. It retested. So my point is, this blue line is probably support. And this might be 2 legs down. Now, what about buying here or in this price level? I think the reality is the trader starts to buy here and scale in, you're going to make money. Now, what is the risk they face? The risk they face is it's a measured move. It's a possible measured move down, and this is a neckline. So if a trader's buying here, it's possible we break to the downside. So the risk they face is getting trapped, and this being a possible measuring gap right here. So surprise bar, maybe 1 minute left, so the bears may get follow through. And if they do get follow through, we may go all the way down to here. We don't have to stop at this blue line. This blue line is just one area of support. This blue line, the midpoint of this bar is support, the midpoint of this bar is support, the high of bar 7 is support. My whole point is when you get a big up, big down, the odds significantly lower for a bear trend. Same thing here. Big sell-off, big bar, follow-through bar. The odds are significantly lower that the day is going to be a strong bull trend day. Therefore, when the market starts to get a few legs up, traders start to sell above bars. Bulls, they will start to sell out of longs and scalp, betting on sideways. I think this is the same problem the bears are going to have down here. 2 legs down, 2 legs down here, but it's very tight, and my concern is this, a measured move down. I was happy to sell this, betting on its first leg, leg 1, pull back, leg 2. Why do I not want to sell down here? Well, even though it's sell to close and it's probably going lower, my concern with selling here is it's the second leg down in what's probably a trading range. In general, I don't like to sell second legs at the bottom of a trading range and 2 legs up the top of the trading range. And really, this was a mistake. I should not have taken this. even though it was really too aggressive and kind of a dumb trade, because the reality is it's a triangle, but it's a possible third leg up. So, but anyways, I'll talk more on that later. Most traders are better off waiting for some kind of double bottom. And what I mean by double bottom, a micro double bottom. Double bottom of here, yes, but this is strong enough. I think the bulls are better off waiting for the market to go sideways. Euro, wedge top, draw like that, you can draw it like this, doesn't really matter. And it's really fascinating, just this really tight channel. I think the market's got to get down to the moving average. We're too many bars above it, and we're starting to go sideways and not find. Traders are willing to buy above the moving average if the market is strong. But here, the market's not going anywhere. So we're drifting closer and closer to the moving average. And at some point, when we get close enough to it, traders will start buying. Here, I think we've got to at least touch it before traders are willing to buy. So 2 legs down, exactly why I did not want to sell down here. Too much risk of a double bottom. And if the second leg trap, leg 1, pull back, leg 2. If it is a second leg trap, we could easily go all the way back up to here. In general, yeah, price actionable, it is a second entry buy. My point with saying I don't want to buy that is I want to see more buying pressure. And I was also short from up here. And, for one, I'm still trading and I'm talking now. Therefore, I have to be that much more careful about what I'm doing. But it's a double bottom, and now it's appropriate. Let's talk about the daily chart. So really interesting what's going on here. If you read the blog post this morning, I mentioned that we had a second entry buy, sell off, pull back, second leg down. I thought this was strong enough here that the first reversal down would fail, and the bulls would get 2 legs up. The bulls bought a new low of the day. It's possible this is leg 1, pull back, leg 2. This is a credible stop entry buy right here. It's a second entry buy that support 50% pullback of this rally from this low to the December 13th high. So some traders bought the December the 6th low, this trading range here. They bought this low and they're looking to scale in lower. One logical place is to hide this bar. So I would not be surprised at all if the market does close above the open and we get a surprise move late in the day. There's still a few hours left in the day. There's still about 3 hours left, and the bulls have time. Bar 40, common to get a reversal. So this is a reasonable area for the market to reverse up. Big down, big up, probably going more sideways than straight up though. Bears, I would get out above the current bar. Tail above 41, disappointing. So let's see what this bar looks like. I think it is reasonable for a lot of traders to exit above the prior bar. And the problem is, if they see this as a trading range, the stop is really above here. It's a mistake to put your stop right here, because if you do that, then you're basically putting your stop at the middle of the trading range. And 2 legs down, if this is a second leg trap, which it very well might be, this is a magnet. And if it's a magnet, the market could race up to it because nobody wants to sell until the market gets there. So in general, I'm not willing to sell a second leg in a trading range and scale in. So if I did sell this close, I really do not like to scale in on the second leg, because if I do, the stop placement becomes really difficult and the risk becomes too big. I did buy, actually bought basically below this bar on a 1 minute chart, and I took part off in this area right here. And my stop is below 42 basically, and I have a half size position, so I bought full size on a pull, basically the close of this bar, took part off here because my risk was really small, and now I'm taking a chance that the market rallies back to the open of the week and the high of bar 32. And part of that, the reason I'm doing that is, for one, strong enough rally, probably a trading range, but also the daily chart. I think the bulls are going to try really hard and get today to close above the high of yesterday or the high of Friday. So it's reasonable for the market to try and rally. And the bears did the minimum, 2 legs down, basically a 50% pullback up here. I mentioned during the morning update that's posted around the first hour, bar 18, that we may try and get a 50% pullback of the sell-off or the rally. In other words, bears selling here, scaling higher, break even somewhere in this area. This is why I don't like to sell when you get a lot of buying pressure. Too much risk that once you fall below an obvious higher low, it can become support. And this is why I'm not willing to scale in on a second leg down. If you do scale in, what do you do right here? Now you're trapped. So it's really not an ideal thing to do. Getting vacuumed up to the open of the day, I say that's still a little bit left to go. So let's see how this bar closes. Strong enough rally, probably the first reversal down will fail though, and the market will have to go sideways before it can go down. And we'll probably get a small second leg up. Therefore, traders will buy if this bar closes above its midpoint or on its high, especially if the bar closes on its high, and will stop somewhere down here, and they'll be open to buying more lower. You'll have some traders selling the high of 39, betting that they can make at least the scalp. So they sell this high at 550, try and make 2 or 3 points, which 350 would be right here, so 2 points would be 350. You look at a 1 minute chart and see they were able to make 1 point if they sold this high at 550. Let's see if the bears can make 2 points, which would be 3.5 right here. Some of those traders, because it came so close to if their target was 2 points, some of them would try and now get a 1 point profit at 450. They tried for 2 points, they couldn't get it, so some of them will try for 1 point. They just got it if they did that. In general, dangerous to take this trade. You have a possible bottom, 2 legs down, and reasonable buying pressure. It's easy to get trapped if you're selling. So most traders should be waiting for long. Is it by the close? Probably is. But the tail on top of 43 is a warning that the bulls are not as strong as they could be. 4 bar micro channel, probably strong enough for at least a second leg up, therefore traders will buy and use a wide stop, betting that the first reversal down will fail. It is possible that this is just a buy vacuum test at the open of the day, which is the open of the week, and that the market will just go sideways here. We do not have to break strongly above this area. But if the bulls can continue to get strong bull bars, then it will increase the odds that the market will break above it. You can see some traders taking profits above the high of the prior bar. You know, it's important to realize that these tails, it's selling pressure. 1 minute chart, here are these two tails. 5 minute chart, it's selling pressure. However, 10 minute chart, it's a pretty strong rally. So it's important to realize that even though there's tails and it's a sign of selling pressure, it's a tight channel and it increases the odds that the first reversal down will fail and lead to sideways. Yeah, price action, the bull's right. It's a breakout on a higher time frame. But the tails are a warning of selling. And look where the market is starting to stall. It's stalling in the middle of this trading range here. So if we take a box, look where these tails are. It's in the middle of this. So even though, personally, I hope we break to the upside and go to the open of the week. And that is because I have it. I'm wrong with a small position betting that the market rallies a little bit higher. However, one cannot be in denial of this right here. This is a lot of trading range price action. Just look at the 60-minute chart. You cannot ignore, well, actually I want to do it on this. 15-minute chart shows it just as well. It is a lot of trading range price action. So the longer this goes sideways, the more and more traders will start to take profits, betting that this is the leg in the trading range, and it probably is a leg in the trading range. Crude oil starting to spin rallying, possible 2 legs up, testing the highs over here. Monthly chart trying to form the bottom, probably going to go sideways in this area, and probably go sideways around 90 for some time. Then we'll look at Bitcoin real quick. Bitcoin probably just going sideways around this price level. It's possible it goes a little bit lower, but probably not much lower before it bounces and goes sideways. I'll look at the Bitcoin chart, but I don't really pay much attention to it. Still too early to sell. I think these tails are more so due to profit taking on 43 and 44 than bears selling. And there are some bears that are selling for scalps, but those are aggressive bears. And I think it's somewhat dangerous here. This is a fairly tight channel, and that increases the risk that the bears get trapped. My other problem with the bear argument is we're so close to the open of the week and the open of the day. This may not be an adequate enough test. Therefore, we may have to go a little bit higher. For the bears, it's a lower high. And I hope it's a lower high midge trend reversal. Bull trend line break to a double top and lower high. Probably buyers below and at least a small second leg up. But this is disappointing for the bulls, and it's a reminder that the market is more likely in a trading range, and then it's going to go sideways in this area. We still may have to get up and test the open of the day. You can see the market test. Part of the sell-off was a test of the 41 breakout point. So the stop entry traders at the bottom of 41. The price was 60.75, and below this bar is 60.75. So it tested the break-even stop to the tick. In this case, if you would have had your stop 1 tick below break-even, in other words, at 60.50, you would not have been stopped out. And this is why it's generally assuming the market turns up here and doesn't fall below it, this is a good example why it's generally a dumb idea to put your stop at break even when you have a credible stop entry that might lead to the low of the day for a few hours. Better to exit early up here. So if you do buy and you take part off, it's better to be quick to exit early or keep your stop below down here. To me, getting out at the break-even price is kind of like a skunk stop. And you've heard Al talk about that before. A skunk stop is basically doing something in the middle. The early exit is below this bar. The late exit is down here. You do not want to exit in the middle. 48 may be strong enough for at least a small second leg down. 46 may be strong enough for at least a small second leg down. So we probably will fall below 47 W bar, so probably sellers above, but also probably buyers below. Right channel, trend line break, so on a smaller time frame, it's basically a major trend reversal. Bear channel, trend line break to a higher low, 50% pullback, so in the buy zone for the bulls. And you obviously don't need a 2-minute chart or 1-minute chart to see that. You're right around 50%, so traders will buy here, stop down here, betting that this is the higher low that leads to a test up here. Still reasonable, we try and test the open of the day. But the bulls need to show signs of strength here and force the bears to give up. Micro double bottom, down on 47, up on 47, down on 48, up on 48. For me, if I did sell below 46, I did not. Had I sold below 46, when 47 closed like it did, I would have just gotten out. If I'm taking a low probability sell, like 46, I want the market to go my way quickly. It's the same thing. It's lower probability than buying above 41, but it's the same concept. If I'm buying above 41, I want the market to go my way rather quickly. I don't want it to stall. Here, it's possible this is leg one. Therefore, if this may just be a pullback, and the market may form a higher low and get a second leg up. Other traders will see this as leg one, pullback, and leg two. But too much buying pressure here that I think the market's going to have to try and go sideways to up. But the bulls need to disappoint the bears. They need to prevent the bears from closing below the prior bar, and ideally, they need to limit the amount of bear bars. It's still a micro channel from 44, so that increases the probability of sellers above. Sign of weakness by the bears. It's possible this is 2 legs down. At least that's what the bulls hope it is. It's not that clear, but leg one, pullback, leg two. The problem for the bulls is the bears are starting to win in terms of time. So this is becoming a fairly tight channel on the downside. And that limits the probability of the first reversal up being successful and increases the probability of lower prices. It's possible we have it's possible this is a double top, a break below the neckline, and this is a pullback, which means the market could try and do this. So you have to be open to this possibility. Probably lower probability. I still think buyers below and a second leg up. However, I think that's the higher probability, buyers below and a second leg. However, if the market does break below 40, you have to wonder about the possibility of this, a sell-off back down to this area, 38.45. Consecutive bull bars, but bear bar here, bad follow through, 2 bear bars, but tails below, possible spike pullback channel on a smaller time frame, and a test of the 42 low. So there might be more buyers down here than sellers. Possible higher low and a second leg up testing it here. But this is a reminder, this pullback is a reminder that the market's in a trading range. Strong rally, but tails above, and then a deep pullback. Reasonable for bearish to exit a couple points above set 49, or exit if the current bar closes above its midpoint. Low one short below 50. Tight channel down to 49, but probably buyers below, and not much lower. The bulls want a higher low and a second leg up, leg 1 pullback, leg 2 up to the open of the day. The bears want a bear breakout below this neckline down here. They want to break out and a measured move down. Still not yet clear. If I had to pick a direction, long or short, I would be long, betting on a second leg from this rally. I don't think we ever went always in short after this. I think this has been the dominant feature. And obviously we have big down, big up, so that limits the probability of the market going much higher. However, at least much above this area, above the open of the week. But I think this is strong enough, and although this is damaging, bars 16 through 50, damaging for the bulls, I think the odds still favor sideways and possibly a test to the open of the day, which is the green line. It's also the open of the week. Bears trying to form a measuring gap and get a downside breakout. The bulls want another failed breakout of this price level. Bears probably exit above this bar, especially if it closes on or near its high. It'd be a second entry buy at support, the 40 low and the 20 low, and a failed breakout below this neckline. Increases the odds that the market will reverse and try and go somewhere up here. Bears trying to break below the neckline. Bulls want a failed breakout and a pullback into this range. Breaking below the neckline. But getting in support, so it might go more sideways here than much lower. Second bear bars, but tails below 53 and 54 at support, so may get a small second leg down, but probably sideways, more likely than much lower. For the bulls, failed breakout below a double bottom, which is also a wedge. The bears see 55 as a pullback from the neckline and the breakout on 53, 54. So the bears want this to be a pullback. Most traders, if this bar closes on its high, always in bears exit, and aggressive bulls will buy, betting on a higher low and a second leg up from this rally. So important bar here. Bulls who bought the 40 low during 52 and 53 were able to scale in and make money. It increases the odds of a possible bottom here and a reversal. probably going to get to the 53 high. This is what I was talking about, this blue line, that it would probably be support if we got down to it. Therefore, that's my problem with selling closes down here, is there's too much risk that you'll end up selling the bottom of the trading range and the market will reverse up abruptly. This is possibly 2 legs down, so leg 1 to 40, pull back 44, leg 2. Or you can say 3 pushes down, 20, 40, and 54. Also, there should have been buyers. This should have been a higher low that led to a second leg up. Therefore, it increased the odds of buyers below 40 for that second leg. I would get out of shorts. I would get out of shorts above the prior bar. Too much risk that it's 3 pushes down and a possible low of the next couple hours. And the sell-off from 44 looks like a leg in the trading range. Therefore, the pullback will likely be deep and disappointing for the bears. So we could rally all the way back to here and possibly the open of the day or open of the week. Sell the close bears 54, disappointing 55. They will try and get out break even on a bounce. Type bear channel though limits the upside, and the market may have to go sideways for a few bars. But it's dangerous here to hold short above this bar. Other closed bears on 54, deciding what to do during 56. Some of them use this bar to try and get out with the small loss possible. Low one short below 56, but big tail below increases the odds of buyers below 56 and 54. So probably not much lower before the market goes sideways to up. This blue line is the middle of the day, or the midpoint, from this low and this high. So from the bar 7 low to the 16 high, middle of the day's range. It's a wedge bottom, 23, 40, and 54. So the bulls will try and get a second entry buy here and a rally back into this range. The bears want a break below the neckline, the bar 40 neckline, double top here and here, neckline 40, and they want the measure move down. So important 30 seconds here. Can the bears get this bar to close on its low, or will this bar disappoint the bears and entice bulls to buy? You can see how the bulls bought in the final seconds of the bar to put a tail below this bar and lower the probability of the short below 56. 3 consecutive bear bars increases the odds of at least a small second leg down, but tail below 56, 57, so it might not go much lower before the market finds buyers getting into the support level down here. It's possible we have to get down to the 7 high, but with these tails below and this big bull bar on 55, I think there's probably buyers somewhere not far below. It's possible the market gets down to this measured move projection, but more likely we're going to go sideways around the midpoint of the day and this area up here. 4-bar micro channel since 55 increases the odds that the first low will fail and go sideways. Possible second entry buy on 59. Reasonable if this bar closes above its midpoint. Really, if this bar is bull bar, I think most bears will exit above the bar. Bottom of the trading range, and not ideal to be selling and really not ideal to be selling below even a bar like 55. So 58 is not an ideal bar to sell the close on. Tail below 56, tail below 57 increases the odds that the market will have a failed breakout below 56 and 57. And it increases the odds of buyers below 54. So let's see if 59 can be a bull bar closing on a tie. The more it closes on a tie, the better of a buy it will be. It's still buying above a 4-bar micro channel, but bulls will buy above it, betting on a swing and a couple legs up. Still on top of the bar, lowers the probability of the buy. Still a credible swing buy, and bears exit above the prior bar. Too much risk of a rally up to the 55 high. Bears trying to get a small pullback trend, but probably a leg in a trading range, and support not far below. Possible support is at the 7th high, which is this red line right here. So we may have to get down close to it. But second, bear bars and then bull bar. 3 bear bars, bull bar. Outside down. Probably disappointment for the bears in another bull bar. The bulls want a second entry buy here. So what do the bears do if 61 is the bull bar, closing above its midpoint or on tie? Well, they will likely exit. Some bears would not exit above 59, and maybe they would exit a mesh and move up the bar up, or the simple fact that it's following 3 consecutive bear bars. But if 61 is a bull bar, and especially the bull inside bar, it would be a second entry buy, which means more bears would exit and more bulls would buy. Tight bear channel, so it lowers the probability to buy. 10 seconds left in the bar. I think bears, if they didn't get out above 59, they get out above 61. Aggressive bulls will buy. It's a second entry buy at support, the 7 high, in the area where the market rallied around bar 9. So most traders, bears would exit here. There's just too much risk of an upside breakout. Aggressive bulls will buy, but it's a tight bear channel, so that lowers the probability to buy. But consecutive bear bars, bull bar, 3 bear bars and a bull bar, another bear bar and a bull bar. This looks like a leg in a trading range, which means the market will probably rally somewhere up here. The bears want another low one short, and I think more likely this is due to traders that sold the 60 close and sold more higher, trying to get out break even. The market's deciding what's going to happen back at the 60 close. Will there be more buyers or sellers? Reasonable swing buy above 61, betting that the market rallies back into this range and tests somewhere up here. Market finding buyers at the 7 high, this red line. For the bulls, they want another stop entry, but this channel is getting tight, and I still think the market's going to bounce, but this channel is so tight that the market, the best the bulls may do is sideways. But buying pressure on the way down increases the odds that this is a leg in a trading range. So we can easily come back in here. So once again, if this bar, another bull bar, I think more and more bears exit and more bulls buy. It's possible there will be bulls that are buying and using wide stops. So now it's another wedge. 1, 2, 3. 1, maybe 2, and then 3. Even though the market's selling off, look at the day. Price action, strong rally, consecutive bear bars, bull bar, 3 consecutive bear bars, bull bar, bear bar, bull bar, bear bar, and another bull bar. It is dangerous to be selling down here. Although the channel's tight, any one of these stop entries could lead to a sharp reversal. Looks like the bears are giving up. Probably strong enough breakout on 64, the current bar, to at least lead to a second leg up. So always in long, probably by the close, but stop far away. Probably at least a small second leg up. Big bar 64, but looks like it's going to be bad follow through on 65. A reminder that the market is in a trading range and that the upside will probably be limited. A trading range and that the upside will probably be limited. Probably a strong enough breakout 64, follow through 65, that there's probably buyers below and the market go at least a little bit higher. But 65 is a warning that it may not go much higher. Tight channel, and since this whole thing was probably a leg in a trading range, in other words, the entire day's trading range, it's reasonable for the market to try and get back to the 40 close or the 40 high. That was the stop entry buy that led to a decent rally. Therefore, you have to wonder about the possibility that the market will get to around this price level. Bulls bought above this bar, they bought the close, betting on 2 legs down, and some of them would use a wide stop and buy more lower. So they bought above this bar here, maybe they bought more above this bar. You can see that's the midpoint, break even on the entire trade. Other traders bought here, and obviously they got out break even. So we may have to get up to the 41 close, or even the 41 high. If I had to do anything, I'd be long, betting on a second leg up. 3 pushes down, 1, 2 on 54, 3 on 60, or 63. It's possible this is the third leg, so the market may have to get here. The market will probably have to get, it looks like it's getting there, but let me, 1 second here. Market will probably have to get to the 65 high at a minimum. There we go. So that is another target for the bulls. I wouldn't buy above 66, but it's a doji. It increases the odds of sellers above and the market going sideways. You can see testing the high close of 55 and turning down. For the bears, second entry short, but big bar, forcing traders to sell in the middle of this range and probably still have to get to the 55 high. So probably more buyers below 50, probably more buyers below 67 than sellers, and the market's probably going to get at least 1 tick above 55, this red line. Getting drawn up to the 55 high, remember I said the 41 high is a magnet as well, so the market may have to try and get up there. So I think the next target is right here. Big bull bar, bad follow through, another big bull bar, probably bad follow through, and sideways in here. It's still possible we have to get up to the 45 low. Reasonable to buy a pullback from the 41 to 44 low or 45 low, and because of that, it increases the probability that the market will get back to it. So I'm actually going to put a line right here, which is around the midpoint of this rally, 40 low and the 44 high. So probably going to try and get somewhere in this area, and we may get all the way to the 45 low. We're going to try and get somewhere in this area, and we may get all the way to the 45 low. So okay to buy the close of this bar, and if it's a big bear bar, it's a current bar, it's a bear bar closing when it's low. Traders just get out and look for another trade. 68 breakout, 69 follow through. So probably going to the midpoint and of this rally, 40 to the 44 high. Probably going to get to the 45 low and 44 low as well. We still might get to the open of the week. So even though that's pretty far away, and I think too far to get there today, I wouldn't be surprised at all if we get a surprise breakout here and a buy vacuum test at the open of the week. More likely, sellers somewhere around this price level. At the first target, next target, 44 low, 45 low, and the open of the week, but still buy the close and probably buyers below. You can see more profit taking on this bar than buying. It's the same logic here. So let me do this. When you get a big bar and the market retests it, it will often find support. So let me explain this in a different way. Big bar and traders sold the close. They sold as it was going up. And on the way down, those traders are going to start buying back shorts. So every one of these, this body, traders bought back shorts. And it's easier to see it here. As this bar goes up, bears sell, and when the market retests it, bears buy back shorts. As this bar goes down, bulls are buying all the way down, and as the market goes back and retests it, traders sell out of longs. Same thing over here. In this case, bulls tried to buy a pullback, they got trapped on the way down, and now the market's retesting that area. They are going to sell out of longs. And the bears that sold all the way down here and scaled them higher, look what they did at the bar 7 high. They bought back shorts. So really what I'm saying is most of the time if you scale in, you can avoid a loss. 2 legs up. So what do traders do below 70? Well, it's been a trading range all day. And I do think the market's going to go a little bit higher. So maybe leg 1, pull back leg 2. The problem is time of day. There's only 12, 13 bars left in the day. Really 11 bars left in the day. That limits the upside potential and increases the probability that traders are going to scalp more. So high one buy, if this bar closes on a high, it's a high one buy above 71, but there might be more sellers above than buyers. Full breakout, but bad follow through. Bears will sell and scale on higher. Full breakout, bad follow through. Bears are going to sell and scale on higher. This bad follow through on 65, 66, and 67 increases the odds that the market will try and test back down to it. So I don't think it's that great to hold long below 70. Look what happened at this line. This line is the midpoint from the low of 40 to the high of 44. As soon as it got back to it on 70, it turned back down. And that's what I've been talking about. Whenever you get something that does not work, the midpoint usually will become the opposite support of resistance. So in this case, you have a sell-off, the midpoint. Let me do it like this. From here, there we go. So from this high to this low, this midpoint should have had sellers. So this should have been a sell vacuum, and there should have been sellers here, and the market broke above it. So this same line is going to probably become support. It should have been resistance, the market broke above it. Resistance, when it fails, usually becomes support. Therefore, when the market retests this low, which is 54 even, let's say, you can see there is some support here and even in this area. Well, it's possible we get back to the open of the day. I think it's too far away. And I think it's really difficult to make the math work. Some traders, instead of getting out below 70, will get out below consecutive bear bars or get out 3 or 4 points below 70. And if that's the case, you can see these traders are still in. In theory, always in bears, always in bulls that got out below 70 have to buy again above 71. But with it being this late in the day, I don't think that's all that ideal. Most traders should just wait until tomorrow. There's only 30 minutes left in the day, and it's too easy to give back whatever you've made. It's important to realize when the probability is just too close to neutral, and there's no edge. So high one above 71, but probably just to let it go and wait for tomorrow. Typically, when you get a buy the close market, and this is a buy the close market, but it's not ideal. It lacks consecutive strong bull closes and decent selling pressure all the way up. But whenever you have a buy the close market that starts the left before 2:30 Central Time or 12:30 Pacific Time, usually the market will not go much higher. Let me find something I want to show real quick. I think this is the risk that the market faces. Even though this isn't exactly the context of today, it's a trading range day, and it's a buy the close rally, but it's already 2 or 3 pushes up. This might be the third leg, and 1, 2, 3, or 1, 2, 3. But by the close, bad follow through here, bad follow through, bad follow through, and then on the 3rd or 4th push up, the market reverses down. This was at the open of the day. But either way, the risk is real that while we might break to the upside and test the open, I think it's going to be challenging for the market to come by the close here. Possible measured move from the low of 63 to the high of 67. Takes you up here. So what do you do if 73 closes on its high above 70? Well, some traders will buy the close, but I suspect if they do, they will be very quick to get out with it being the third leg up. So if you're buying here, if this bar closes on its high, you're betting on a quick breakout to the open of the week and open of the day. Otherwise, it's better to wait. And realistically, it's better to wait for the bar to close. I thought about if this bar closed on its high, potentially buying the close or waiting for a second bar and buying the close to front run the close of the current bar. But when this bar closed weak and sold off into the 1 minute chart, sold off into the close, I did not buy. This is why it's important to wait for bars to close. Too much risk that whatever you're buying, the bar can alter and look completely different from when you bought it. So 3 pushes up, 65, 70, 73. Now it's a parabolic wedge. And although it is a micro channel on a higher time frame, 10-minute chart, let me do it like this, so there's not all the lines obscuring the chart. So you can say 10-minute chart on a micro channel, look at the follow through bull bar with a big body, that follow through a bull bar, but smaller body compared to this one, that follow through another bull bar, an inside bar, an even smaller body than this, and then that follow through. So what does that tell you? Well, it tells you that the momentum is drying up. There's not a lot of urgency at this price level, and that increases the odds that the market may pull back. So 3 pushes up and getting late in the day, realistically, it's better to wait for tomorrow. Not an ideal buy the close bar. What about selling the close? Well, it's a tight channel with an open gap, so that increases the odds and increases the risk for the bears that the bulls could get the surprise upside breakout. This is, I don't want to do it like that. This is a tight, so it's trading range, and you can see the market is back in the middle of this trading range. If I take this high, maybe this low, the 40 low, so if I take the 16 high and the 40 low, here's the midpoint, and you can see the market touched it and reversed down. So you're right in the middle of a tight trading range, and that is probably the worst area to do something. Bulls will buy and put a stop below 72 or 71 and take a chance that we break out to the upside. I think better to wait. Bears get out below 75. Bulls get out below 75. Too much risk of a surprise breakout late in the day, so not worth being long. It's also a micro double top, up on 73, down on 73, up on 74, down on 75. The weekly chart may try and form an inside day or inside week. So I wouldn't be surprised at all if this week closes as a bull bar and an inside bar from here. The daily chart I mentioned on the blog post that we have a trading range here. We sold off for 5 or 6 days, testing a 50% pullback in the 2-month rally, and it was reasonable for the bears to get a second leg down. This was strong enough. The rally to December the 21st was strong enough that there'd probably be buyers below, and that this would be a second entry buy. You can see the bulls had a reasonable second entry, although it was forcing traders to buy in the middle of the tight trading range, but it had that follow through. Some bulls bought and by the way, I'll open the question box on the GoToWebinar, so it's open now. And bulls would buy the December 6th low and more above the bull bar, and some would just buy and scale and lower. And that's in part why there were sellers up here. Bears would sell above this bar, betting on the second leg down. They would also sell knowing that the bulls that bought the December 6th low and more lower would get out break even. So some bulls might be willing to buy above here, scaling bulls. I do think we're going to get back to the December 6th low and any of these trading range lows, and probably we'll get to 4,000, the big round number. But with now 3 days left in the year, probably going sideways and not much up or down for the rest of this week. That makes me think that the market will probably be an inside bar and stay inside the range of these 2 days, which was the range of last week. So on the 5-minute chart, I'm going to do this. Whenever you get a big sell-off and then a big rally, it's important to realize that the odds favor a tight trading range. Well, let me back up. It's important to realize that the odds favor a trading range more than a strong move up or down. So sell climax, buy climax, big down, big up, probably sideways, most likely. Big bear bar on bar 1, 3 pushes up, wedge top, 1, 2, 3, or 1, 2, and 3. It's basically a triangle. It's a sloped wedge, or it's a wedge. So bar 1, probably a big enough surprise that the first look will fail, and the market will have at least a small second leg down. But in general, better to wait for consecutive bear bars up or down before trading buy the close, sell the close, but probably sell the close and going a little bit lower. Bar 2, another big bear bar, but pretty big tail below. So that's a warning that there's probably buyers somewhere below, and you can see traders that sold the close took profits on as the bar went down. So this tail is buying pressure. It's also an implied pullback, so traders will sell the close and scale in higher, betting on sideways to down. An inside bar on bar 3, closed above the midpoint, probably buyers below 2 and 3, but with 3 consecutive bear bars in a micro channel, it's a breakout and it'll probably have a second leg down. So probably sellers above and at least going lower. So if I had to pick a direction up or down, it's better to sell the close and use a wide stop than buying below these bars. Surprise bar on 4, strong enough bar for maybe a little bit lower. Now it's a 4-bar micro channel, but probably it was reasonable to buy below 2 and 3, and that means that bulls will buy either of these lows, scaling and lower, getting out break even, which is what happened right here. Bar 6, low 1 short, but lots of tails below bars increases the odds that there's probably buyers not far below in the market. It's going to transition and start to go sideways. It's also a retest of the 19 close. Yesterday, or this is Friday, this sell-off, there we go. The sell-off here was strong enough that it would likely have a second leg down. And this is that second leg. So even though the market rallied for 50 bars after the sell-off, you can see it still got a second leg down, which happened on today's open. So it's a credible double bottom. And because of that, traders will look to buy, betting on an opening reversal. 7, a big sell-off, big tail, so more buying pressure. It's also a parabolic wedge, 2, 4, and 7. Reasonable for bears to take profits. What about buying? Well, it's forcing me to buy above a pretty big doji bar in a tight channel, so it increases the odds that there might be more sellers above, but aggressive traders will buy, betting on a couple legs sideways to up. And you can see bar 8 and 9. 9 was the pullback, and it went outside up. So 2 legs up, market went down and up, pullback, and rallied on bar 9. Strong enough breakout on 9. Is the market always in long? It might be, and I suspect it is, but probably one more. The bulls probably need one more bar. It's retesting the 55 low, so bulls bought these lows in here, scaling lower, getting out at their original entry. Strong enough breakout on 9, probably buyers below, and at least a second leg up. So it's a reasonable buy the close bar, betting that the market will go higher. 10, another buy the close bar, that big tail. So consecutive bull bars, buy the close, but just like this had a problem, just like this led to a couple legs down the route and then a reversal. These consecutive bull bars will probably lead to a couple legs up, followed by a reversal back down. So you can buy the close, but the risk is big, and the upside is probably limited. But reasonable to buy, betting on a test of the open of the day and the high of bar 1. And the market rallied, went above the open, reversed down. So big tail on 10, big tail on 11. Obviously, it's a sign of selling pressure and likely profit taken by the bulls. Bears will sell at the midpoint of these bars. They'll sell this close, they'll sell the midpoint here during this rally and scaling higher, betting on a trading range. 12, an inside bar, possible final flag, probably sellers above and scaling in higher, but also buyers below, scaling in lower and sideways. 13, high 1 buy, but just below resistance. So probably sellers not far above. And 15, you can call it a second entry buy with 12 and 15, tight trading range. But tail to low increases the odds of buyers somewhere down here, but the market may have to get back down to 13 low before the bulls come in. And it did not trigger on 16. Small triangle on a smaller time frame. The market broke to the upside on 16, reversed back into the apex of this final flag. So bears will call it a final flag, but with only 2 bear bars, really 3 bear bars in the past, ever since down here, probably going more sideways than straight down. Consecutive bear bars, 17 and 18. Probably, well, it might be sell to close. The problem is if you're selling down here, you're selling at 13 low, and that's probably going to be support. Bears, they sold this close, they sold during this bar, they sold the close to 10, scaling in higher. What are they going to do when the market retests those price levels? They're going to buy back shorts, and the bulls know that, and the bulls are going to buy aggressively at these price levels, trying to keep support and get a second trend resumption up. So 18 is technically sell the close for a second leg down, but it's also buy the close. So bulls will look to buy and scale in lower. Strong enough breakout 17 and 18, probably better to wait for a strong reversal bar or wait for a small second leg down. Too much risk of, if you're buying this close, you can easily get another bear breakout or the market could test all the way down to the 9 close, which is right here. 19, a reminder that the market's probably in a trading range. You can call it a double bottom with 13 and 19. Tail above 19, so probably sellers above and at least a small second leg down. And that's what happened here. The market went, we can't tell if the market went above this high, and then sold off, but either way, the market went down and reversed up. You can see it tested the midpoint of this rally. So it's reasonable to buy in here. Bears that sold, scaled in higher, would likely take profits on the way down. Outside up on 20 is a double bottom, 2 legs down, leg 1, pull back, leg 2. What about buying above 20, betting on trend resumption up? You can do that, but the problem is it's a big bar forcing you to buy in the middle of a tight trading range after 17 and 18. So probably there might be more sellers above than buyers. Some bulls bought the close of 17 scaled and lower, and they may be disappointed enough where they'll take profits back at 17 close. 21, breakout pullback sell, but probably buyers below scaling and lower. And you can see what happened on 22. Bulls bought above 20, disappointed 21, trying to get out break even at the 22 high, and the market sold off. So may get a small second leg down, but if we go below 20, probably buyers below. And the market formed a double bottom of 20 and reversed up. 23, outside up. Same problem as 20. It's a second entry buy, and it's probably okay. But if you are buying above it, your risk is big. So you have bad risk reward in a tight trading range. And you can only take that trade if the probability is high. And the problem here is, I think most traders that buy above 23, they're buying in the hopes that the market races up. And if the market stalls, a lot of traders get quick to exit. 24, a deep pullback. You can see that a lot of traders, instead of buying the close of 23, tried to buy a 50% pullback at 23, which is what happened on 24. And 25, second leg up. On a smaller time frame, 24 is selling pressure. Therefore, it increased the odds that the market would find sellers above. 25, you can call it a low 2 short, low 1, 21, low 2, 25, but middle of a tight trading range. Possible 2 legs down, leg 1, complex pullback, and then leg 2, testing the 9 close. So it's okay for bulls to exit below 25 and look to buy again, but not ideal trading in stop entries in a tight trading range. And 25 didn't trigger. 26, an inside bar, possible 3 pushes up, 1, 2, 3. Bulls trying to break above, and you call it a minor wedge, but more importantly, it's a tight trading range, just under obvious resistance, so probably sellers above, scaling in higher. 27, closing above the past 8 or 9 bars, testing the open of the week, open of the day, and the high closed. But bulls really need a strong breakout, otherwise a lot of traders will take profits up here. Give me just 1 second. 28, you can call it a wedge. And obviously traders took profits on 28. 3 pushes up, 1, 2, 3, or 1, 2, 3. Reasonable to get out longs below 28 trading range. So whenever you have 2 or 3 legs up, better to look to take profits and buy lower. 29, decent entry bar after 28. Consecutive bear bars. Bears probably need more, but more bulls will exit below 29 just in case the bears get a downside breakout. 30, traders sold above 28, and traders sold above 29, betting on a second leg down. What about selling the close at 30? Some traders will, but the tail above 30 is a warning, and that is buying pressure, and that's a warning that the market may not go much lower. And you can see it's what happened on 31. 31 forced the traders to buy once again at the top of the tight trading range. So there might be more sellers up here than buyers. 32, and it's a triangle. 3 pushes down, 3 pushes up, 16, 28, and 32. 3 pushes down, 20 or 23, 26, and 30. Middle of a tight trading range. So not great for stop entries. Breakout, strong enough breakout. Is it a strong enough breakout for a second leg? It might be, but the tail on top increases the risk that this will be a failed breakout of a triangle. Also, whenever you get a breakout of a triangle, in general, 50-50 chance the first reversal up fails. So let me just draw this real quick. Bear bar 34, but big tail. Probably sellers. Let me back up. Failed breakout above a triangle, so possible final flag on 34. Okay, swing short below 34. Reasonable for bulls to exit longs below 34 and aggressive bear sell, betting on a wedge top with 25, 28, and 33 with a double top, 16 high. 34 and 35 consecutive bear bars. Is it sell to close? Probably not. The bears probably need a little bit more, but it's 3-bar micro channel and it increases the odds of sellers above or at least a small second leg down. But 34 and 35, the tails below is a warning that the market may not go much lower. 36, 3 consecutive bear bars, probably sell to close or at least a small second leg down. And the test is a 20 low. The bears want a double top. They see a double top, 16, 33. They want to break below the neckline, 20 low, and a measure move down to here. 37, you can call it a micro double bottom, down and up, down and up. But 4-bar micro channel, really a 5-bar micro channel, probably sellers above and sideways. Surprise bar on 39. Strong enough breakout, probably at least going a little bit lower and probably will test the 20 close. So some traders will sell the close, stop betting on lower prices. 40 broke below 20 and then immediately reversed up on 41. So it's 2 legs down, leg 1, pull back, leg 2. It's possible 37 is a final flag. On a smaller time frame, 38 is basically this. It's a failed breakout of the triangle. So this is inside bars on a higher time frame, and this is just a tail. It's a failed breakout above this tight trading range. And that's the same thing here. 41, double bottom with 20, reasonable to exit longs, exit shorts above 41. Aggressive bulls will buy, betting on a double bottom in a rally. Most bears exit above 41. And the reason for that is stop placements far away. It's a double bottom in a probably always in long market, and probably an always in long market. So most traders will exit. 42 consecutive bull bars, testing the apex of this triangle. Probably going to get to the 39 high minimum. And again, one of the problems with 2 legs down in a trading range, which is also a second leg trap, is typically it's a mistake when you have 2 legs down, it's a mistake to sell the close and scale in higher, because whatever that lower high is, the market will probably get to it and go sideways. So typically, most traders should just exit. If you sell this close and you get a reversal bar and it's a double bottom and it's 2 legs down, it's typically better just to get out and wait for another setup. 42, 43, 3 consecutive bull bars. It's a 50% pullback of this sell-off. Is it buy the close? It might be, but it's a tight channel down, deep pullback, testing the high of 39. So probably more sideways than straight up. The tail on 43 is a warning that the market will probably go more sideways than straight up. 44, another tail. But 4 consecutive bull bars, probably buyers below 44 and 43 for at least a small second leg. And you can see bulls that bought the 44 low or the 43 low, they got trapped. So they bought the low 45, scaled in lower, 2 legs down, but the channel down is tight, and it's basically a 5-bar micro channel. 49, another bear bar, and then now it's a 6-bar micro channel. And then you can see the bears started winning in terms of time. Bear breakout, 53, follow through 54. Whenever you get a double bottom and you break below the neckline, like 40, it's common to have a deep pullback and then an attempt at trend resumption or an attempt at resuming the double top measure move down. And that also creates a triangle, 1, 2, 3. So it's a breakout pullback sell. So bears will sell here, betting on a successful breakout below the double bottom. 53, 54, breakout follow through, but it's also the third push down. First leg 20, second leg 40, third leg 54, and it's nested. First leg 46 or 47, second leg 49, third leg 54. Reasonable to sell the close. However, when you get a day like this where you get a strong rally, all these price levels become support. Therefore, it's generally a mistake to look to sell the second or third leg. Too much risk that this is basically going to be a trading range check. And while the market may sell off and get to the 7th high, we could easily fail here and the market could reverse up. 55, strong bull bar, but a tight channel in a micro channel since 51. So there might be more sellers above than buyers below. But bears disappointed that sold the 54 close. They may use 55 to scale in and try and get out break even back to 54 close. 55 is a warning that although 53 and 54 will probably have the second leg down, the second leg will probably be limited and there will be buyers not far below. 56, 57, and then bulls gave up on 58. So you can see some traders were buying the 54 close, and in part it was bears buying back shorts, and it was also bulls buying the 54 close, betting that the bears would get trapped. And you can see the bulls got trapped. Bulls bought the 54 close, they got trapped on 58. And you can see right here on 59, those bulls are trying to buy back shorts or sell out longs back to 55, the 54 close. Some of them did, and then the market went a little bit lower. 61, now you have three consecutive. Now you have another wedge bottom, 1, 2, 3. 3 consecutive bear bars, so it's possible this is the first leg, pull back, second leg, and then that's the third leg. But either way, whenever you start to get bear bars and then a reversal bar and then another bear bar and then a big bull bar closing on its high and another bear bar and then bull bar, it's basically, you know, the market's forming support, and the context makes sense here for the market to reverse up. It's testing the 7 high, so it's probably there's probably buyers not far below. Always in bears, most of them, I think it's reasonable to exit above 59, certainly above 61, and then you have to get out above 63. 64, strong enough surprise, probably always in long and at least a couple legs up, so probably buy the close. 65, 66, dojis, warning that the market may not go much higher. And 68 is the second leg up, 69 follow through. I mentioned this blue line is the midpoint from the 40 low to the 44 high. So it's the midpoint. And that's a magnet for bulls. This rally should have led to buyers below and a second leg up, and it failed. And they got an endless pullback. Therefore, traders have to think about the possibility. Therefore, those bulls that got trapped will probably be able to get out without a loss. So some of those traders, they buy on the way down and they put a stop somewhere below this measured move. It's a measured move target from the high of 44, low of 40. And you can see the market held above it. 2 legs up, 65 being the first pullback, 70 being the second. And you can see traders took profits. Reasonable to exit longs below 70. Other traders will use a wider stop, maybe a measured move of this bar, or put a stop below 68 or a couple points below 69, betting on at least a little bit higher. And you can see even the bulls that bought the low of 45 here were able to avoid a loss. Is 74 by the close? Well, it might be, but the problem with buying 74 is, one, it's late in the day, and two, it's the third push up. Leg one, pull back, two, pull back, three. And typically when you have a buy the close rally late in the day, it usually does not last that long. And it's also testing important support or important resistance, the 45 low. Bulls bought the 45 low, scaled them lower. They're probably going to take profits back at this red line here. 75, bear bar, closing when it's low. Bulls exit. Aggressive bears can sell, but probably better just to wait for tomorrow. And the reason why bulls exit is too much risk of this. And you can see the market reversed back all the way to the 64 high in just a matter of a few bars. For stop entries, it's an okay sell below 1, but the risk is really big. And probably the best stop entry, I don't know how I say that, and then a reasonable buy above 9. And I don't know, 40 was probably the best stop entry was buying above 63 or 61. And there's a few ways you can handle it. If you buy above 61, stop below 60, you get stopped out and you buy again above 63. Some traders will they'll trade a half size position. So they'll buy one lot above 61, stop below, and they'll get stopped out, and then they'll buy 2 lots above 63, stop below. Other traders will buy above and use a wide stop. And if they did, this never stopped them out. Let me review always in. So consecutive bear bars, sell or close, always in short. Bulls exit, probably, I think most bulls will get out above this bar. So as 9 went below 8, and whenever 9 goes above 8, I think a lot of bears would exit. Aggressive bulls, always in long above 9, so bulls buy, they get out below 17, and most of them would exit most bears would exit above 20 or 23. And reasonable for bulls to get out below 29, 3 legs up. If the bulls didn't get out there, they certainly get out, they certainly get out below 34. And aggressive bears sell below 34. Bears get out above 41, and aggressive bulls buy, tight channel, and reasonable for bulls to get out below 46 or 48. And where did the bears sell? That's the tricky part. And that's what causes all of this, is really not that clear. Is it always in short on 53 or 54? Technically it is, but who wants to sell the third leg down in a likely trading range day? Do you really want to sell this low when you have this strong of a breakout? Of course not. This could have just as easily led to the low of the day. So most traders should step aside. And then bears, they get out above any of these bars. Aggressive bulls buy. If they buy here and get stopped out, they buy again above 63. And bears can get out below 70. In theory, if they do, they buy again above 71. But with the targets so close to each other and not far above, the 45 low is an important magnet. Most traders should be very quick to exit. So if bulls bought, they get out below 75. Bears, do they sell again below 75? They can. And if they do, they get out above the bull bar or a couple points above this bar here on 78. Limit orders, probably buyers below 6, scaling lower, but you need a wide stop. You need a wide stop. Bar 12, reasonable to buy the low and put your stop somewhere down here. for a second leg, and you take profit somewhere up here. And there's sellers up here, but hard to do if you're just starting out. And probably buyers below anything in here. And then sellers above 32, sellers above 28. In general, in the trading range, traders will sell the third leg. So you get 2 legs up, leg 1, pull back leg 2, traders will start to sell above 25. And 2 legs down, so traders will start to buy somewhere in this area. And probably buyers below 65. So the easiest limit order trades, the 6 low, the 12 low, and I thought 62, that's a tricky one, but probably 65 low, that's a reasonable limit order buy. In general, whenever you have this kind of a day, whenever you get a big rally and then a trading range, you get a big sell-off and then a big rally. The rally traps all the bears that sold on the way up. So it's kind of a special circumstance, but when you get a really big rally that's likely to make the day a trading range or a trend day, traders will start to buy below the bars and scale in lower. So they'll buy 2 legs down, they'll start to buy closes, scalp out, and 2 legs up, maybe a double top. Whenever there's 2 legs down, traders buy again because they're confident one of these lows will act as support. And what about buy the close, sell the close? Sell the close probably 1, definitely sell the close 2. And if you sell the close bar 4, it's a little bit more tricky and more dangerous because it's probably going to form an opening reversal. So you have to be quick to make decisions if you sell the close at 4. Buy the close 9, 10, 11, but big down, big up, so trading range likely. You can sell the close at 35, 36, but you need a wide stop and better if you can scale in. What about sell the close on 39 or 40? I would not. Maybe sell the close 39 if you're really quick, but pretty dangerous. If anything, it's better to take profits down here than to sell. And then probably buy the close 42, 43, but middle of a tight channel down. So may get leg 1, pull back, leg 2. In other words, spike, channel, spike, pull back, channel. What about sell the close 53, 54? If anything, it's probably buy the close. And buy the close 65, 66. You can buy the close at 68, but really close to important magnets. So you have to be quick to manage the trade. And then if you're long, you get out below 75. Let me take a look and see if there's any questions. All right, so it looks like there's no questions today. Hope everyone has a good rest of the evening.